Joe, good to see you. How you doing? Evening. How you been? Pablo, good to see you. How you doing? How you been? Scott, good to see you. How you doing? How you been? How's things? Mike, good to see you, brother. How you doing? How you been? Comatose, good to see you. How you doing? How you been? Jason, good to see you, brother. How you doing? Evening. How you been? Pure, good to see you. How you doing? Evening. Scott, good to see you. So let's do a little rundown of what we're going to be talking about on tonight's live. By the way, we're on episode 206 right now, which is absolutely incredible. Hi, Miles and CMF. Connie, good to see you. How you doing? How you been? So let's do a rundown of what we're going to be going through on tonight's CMF live. 1 second, sorry. Sorry about that. Mike, I'm first again. Yes, you are, brother. We have a mixture of news to go through on tonight's live, some data reports to go through as well, some CBDC announcements as well to go through. So, on episode 206 of the CMF Live, which is incredible, we're going to be talking about JP Morgan's new report that just came out regarding Bitcoin mining and essentially is it going to be sufficient moving forward. And then we're going to go through a report from BlackRock as well on tonight's live as well. And regarding BlackRock, describing Bitcoin's risk factors moving forward for institutions holding on to Bitcoin. We're also going to be talking about Rumble on tonight's live show as well. Rumble is a platform just similar to YouTube. They're actually going to be moving forward with holding Bitcoin on their balance sheet. So you could say pretty much another industry that's following the footsteps of MicroStrategy. We're also going to be talking about Shanghai on tonight's live as well. As I said previously, a lot of countries are going to be taking footsteps towards opening their doors to blockchain because of Donald Trump. Donald Trump trying to make the capital of cryptocurrencies, the United States, is going to get a lot of countries into cryptocurrencies. And China is going to be one of those countries that has to reopen their doors to stay competitive to the US market space, which is basically what's happening right now in China, where in the courts they're deciding, should we go forward on cryptocurrencies or not. So we're going to go through that on tonight's live as well. We're also going to talk about BlackRock again on tonight's live, regarding BlackRock clarifying about US Bitcoin reserves and allegations. Apparently, BlackRock has a different opinion about Bitcoin reserves for the United States government. We're also going to talk about tonight's live regarding Tether. So apparently the man who supplies Tether from Wall Street, the US essentially treasury bonds, is chosen by Donald Trump to run something inside of Donald Trump's campaign. We're also going to talk about Grayscale on tonight's live as well. Grayscale apparently is pushing the boundaries with their new Bitcoin update of their filings that they've just done as well. We're also going to talk about on tonight's live regarding the matters of the FDIC. The FDIC chairman is the one that was stifling banks from getting involved with crypto assets. And he's going to be leaving office. Now we have a deadline of when this man is going to be leaving office. He's pretty much the best friend of Gary Gensler, the weasel Gary Gensler. So we're going to talk about that on tonight's live as well. We're also going to talk about El Salvador on tonight's live. El Salvador is going to be debuting their first ever tokenized US T-bills as well. We're going to talk about on tonight's live the matters of essentially a perspective from Mike Novoscott, the billionaire, on the matters of Bitcoin, cryptocurrency market space moving forward. And we're going to talk about a new cryptocurrency project on tonight's live, a cryptocurrency project that I talked about a while ago that has just decided to open their doors and launch. So we're going to talk about why this cryptocurrency project could be something maybe to look into if you want to. We're also going to talk about Trump on tonight's live as well, regarding a new person that has just been chosen by Donald Trump's campaign to be the new SEC chairman. So we have 5 people right now on the list for replacing Gary Gensler. And the new person has just been announced today. We're also going to talk about tonight's live regarding the matters of Ripple and Cardano. Now, Ripple and Cardano have had sit-downs together in the past, but we never knew how far that meeting was going to go. Where apparently we have some updates from the CEO of Cardano on what he thinks about Ripple integrating, or XRP Ledger integrating into Cardano, or Cardano the opposite way around. And we're going to be talking about the Bank of Italy on tonight's live as well. The Bank of Italy's governor is urging the European central banks to get more involved inside of essentially rate cuts, because otherwise the EU is not going to be capable of moving forward. That rate cuts need to be happening ASAP. As I said previously, rate cuts are extremely good for the crypto asset market space because it's an indication that a traditional market space is not doing too well, which means people will essentially hedge against that scenario by going for alternative assets, which typically leads to cryptocurrencies. We're also going to talk about Brazil on tonight's live as well. Brazil, the central bank, is moving forward with step 2 of their CBDC, and there's a particular crypto asset involved. And we're going to be talking about Ripple on tonight's live towards the end of the live, regarding Ripple venturing in and their new partnerships and their expansion on their networks. So those are the news topics we're going to be talking about tonight's live, regarding Ripple, regarding Brazil, regarding Italy, regarding European central banks, some reports to go through, JP Morgan, BlackRock, and so on. Now, the first news we are going to be covering is regarding the JP Morgan report. But before we go through that news, I just want to say to everyone, welcome to the CMF Live. If you're watching this for the first time ever, I'm Miles, and I go by the persona Crypto Miles, and the CMF stands for Crypto Miles Family. On this live, you can tune in every single night where I talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. And also we do Q&As on this live as well, which means if you do have any questions, I'll be more than happy to answer them. Put them down to the comment section. And also the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So if you're watching this for the first time ever, welcome to the CMF Live. And if you're watching this as a regular, let's go CMF. And the live show has officially started now. But before we go through the first essentially topic, let's go inside the comment section. I also want to say thank you so much to everyone that's retweeting this live right now on X. I'm getting notifications. Thanks so much to everyone that's retweeting this live right now on X and liking this live on X as well. Thanks so much to everyone on YouTube who's watching right now, who's also liking the live as well. So let's go straight into the comment section and we go straight into the first news. I'm glad you're feeling better, Miles. Let's go, Scott. I am feeling a lot better. Let's go, Miles. T, good to see you as well. How you doing? Evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Hi, Miles and CMF. Dennis, good to see you as well. How you doing? How you been? Evening, Miles and Crypto Peeps. Semper, good to see you as well. How you doing? Hi, Miles and CMF. Stormy, good to see you as well. How you doing? How you been? Have you seen the Mind Goblin? I still haven't seen it, no. Good evening, Mystic Miles and CMF family. Funky brother, good to see you as well, brother. How you doing? Good evening, Miles of CMF, free and forever. Good to see you as well. How you doing? Hi, brother. Camel, good to see you as well. How you doing, brother? Is Gary finally gone? No, Gary still has his job, but he's going to be fired anyways, or he has to resign. Now, there's also, you could say, some sort of an update on Gary Gensler's resignation, of what particular date we could be possibly looking into. Morning, Miles of CMF. Shelly, good to see you as well. Morning, how you doing, Shelly? How you been? How have you been? We're doing great, funky brother. Hello to my CMF on YouTube. Scott, good to see you on YouTube. Morning, Miles of CMF. Solomon, good to see you. So how you doing? How was your day been, Miles of CMF? Lena, it's been great. How was your day, Lena? Now, first news topic on tonight's live is JP Morgan. Important report has just came out from JP Morgan on the matters of Bitcoin economy. There is a serious progress that's being made right now. And this is according to JP Morgan's recent report that was released today. According to a recent JP Morgan research report, the Bitcoin mining essentially economy showed significant improvements in the first half of November. The hash price, a key indicator of Bitcoin's mining probabilities, has increased by 29% since late October, as Bitcoin has risen and outpaced the growth in the network hash rates. Analysts essentially Smith and Charles wrote that the rising transaction fees, which now account for a larger portion of the block rewards, have further increased profitability. In other words, the Bitcoin mining industry that was struggling to be able to cope with anything, they're actually making profit now, which is good to see. The total market value of the mining companies tracked by JP Morgan increased by 33% in gains, about $8 billion between October 31st and November 15th. This growth was attributed to the price increase of Bitcoin and the renowned optimism in the general cryptocurrency markets following Donald Trump's presidential elections victory essentially earlier this month. And Bitcoin surged as much as 30% during this period, reaching all-time new highs. The Bitcoin network's hash rates increased by 2% on a monthly basis, averaging 718 essentially hash rates per second. And hash rates, which means the computing power used to verify essentially the mining transactions on the blockchain, is a key indicator of the competition among miners and the difficulty of the network. Despite the rising hash rates, US-listed mining companies continue to hold a dominant position inside the entire world. And JP Morgan's reports noted that 14 US miners in this essentially coverage area currently account for 28% of the global network's hash rates, maintaining their record high shares of mining activity. So the Bitcoin mining industry, which was incredibly struggling with pretty much zero profits, is now doing quite well for themselves. A new report from JP Morgan states that they're actually very profitable right now, which is something they were struggling to do in the past. And that's only because more institutions are getting involved, because Donald Trump becoming president of the United States is bringing that institutional wave inside the cryptocurrency market space, and also bringing some more for the Bitcoin ETF space. Now, moving on from JP Morgan's new report that was released to BlackRock's report. BlackRock's expert questions Bitcoin's essentially risk classification. Robbie, which is from essentially a BlackRock, he did the BlackRock report, he's the head of digital assets at BlackRock, is questioning the typical classification of Bitcoin as a risk on asset or a risk off asset. Now, if any sort of asset, cryptocurrency wise or not cryptocurrency wise, is supposed to be considered a risk off asset, we'll put it in the category of gold, which means we'll react the same way that gold does in any type of scenarios. So if we have a war type of scenario, gold will become a safe haven and the price of gold will go up. If Russia and Ukraine go more at it, or if more wars start happening in the Middle East, then the price of gold will increase. Now, Bitcoin should be reacting the same way, essentially, is what BlackRock is trying to say, should be a risk off asset. But they're saying sometimes Bitcoin is a risk on asset. So this is where it gets a little bit interesting. In a recent dialogue, essentially with Yahoo Finance, he pointed out that Bitcoin's investment characteristics diverge notably from those of traditional risk assets, despite its acknowledged volatility. Mitch from BlackRock asserts that Bitcoin does not exhibit the same fluctuations as stocks that are swayed by market sentiments. Instead, it is shaped by specific influences, including macroeconomic trends and inflation worries. Recognizing these differences is vital for institutional investors, as highlighted by Mitch. He said the risk and return profile of Bitcoin significantly contrasts with stocks and most perceived essentially risk assets. Grasping this difference is essential for institutional investors and asset managers. He also emphasized that Bitcoin's distinct behavior could provide a valuable opportunity for portfolio diversifications. Moreover, he suggests that it might serve as a safeguard against essentially inflation, pointing out the importance of these features in crafting solid investment strategies. The optimism surrounding Donald Trump's crypto-friendly policies has catalyzed essentially Bitcoin's recent surge, and Mitch notes that the reduced market uncertainties and the launch of crypto ETFs have provided a beneficial climate for Bitcoin's advancements. And additionally, Trump's assurance not to liquidate Bitcoin as essentially assets has alleviated some of these market fears. Now, he stresses that the anticipation of regulatory clarity under the new SEC leadership offers a hope to cryptocurrency sectors. And although he cautions that the unmet expectations could result in the market declines, recently, Bitcoin's price has surged over 3%, hitting $93,745, with trading volumes increasing by 34% to $72.5 billion. And active trading persists as BlackRock secures approval for Bitcoin options tradings through the Nasdaq. Now, Bitcoin option trading is going to be available through the Nasdaq. It was supposed to be available today, but throughout this week, it should be available, which should increase the price of Bitcoin as we move forward. Now, Mitch also identifies Bitcoin's unique investment traits compared to stocks. He suggests that Bitcoin can act as a inflation hedge, but he did say that sometimes Bitcoin doesn't react the way it's supposed to, because when, for example, now the missiles, so Russia sent missiles to Ukraine, and Bitcoin didn't react the way it's supposed to do, which is increase in price. A risk-off asset will pretty much increase in price of a scenario of war happening. Bitcoin declined when Russia sent missiles to Ukraine. It's not supposed to be like that. Bitcoin is supposed to go up in value, but it did the opposite. Political developments, especially Trump's policies, are boosting Bitcoin's market sentiments, no doubt about it. Trump's policies in general, firing Gary Gensler, getting a new SEC chairman, rules and regulations, the capital of cryptocurrency for the United States, is all positive for the crypto space. Not just for Bitcoin, but a positive for the entire crypto space. As I said previously, it's just 4 years of making money under Trump's policies for crypto assets. But yeah, BlackRock in the past did say that Bitcoin is a risk-off asset, which means it will put it in the same category as gold, is what BlackRock said in the past. Interesting enough, BlackRock today coming out and saying Bitcoin can be a risk-on asset also, which means it can't be in the same category as gold then, because gold will react in a positive way in scenarios of war, and Bitcoin didn't. And this is a perspective from BlackRock. This is a new report from BlackRock that maybe BlackRock was wrong and that Bitcoin shouldn't be in the category of risk off asset, but instead a risk on asset. Which is ironic because that's exactly what JP Morgan said. The day that BlackRock released a report and said Bitcoin is a risk off asset is the same day JP Morgan released a report and said, no, it isn't. It's a risk on asset. And now fast forward to today, BlackRock's reports are matching JP Morgan. That maybe Bitcoin is not a risk off asset. Now, moving on from essentially BlackRock's report. So the next news we're going to go through essentially is Rumble, another company that's decided to use Bitcoin on their balance sheets. Now, obviously, MicroStrategy was the first company to do that, and about 8 other companies decided to follow the footsteps of MicroStrategy, and Rumble is the next one to follow his footsteps as well. But before we go through that news, let's go inside the comment section first. As I said previously, if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. So we go quickly through the comment section, and we go straight into the Rumble news and Michael Saylor's perspective on Rumble as well. Let's see where we were at. We were at here. Solomon, good to see you. How you doing, brother? How you been? Good evening, Miles and all CMF. JP, good to see you, brother. How you doing? How you been? Why no pump for Hulo? Give it a little bit of time. We're still moving forward very slowly. The only crypto assets that are doing quite well for themselves are financial crypto assets, and obviously Bitcoin as well, Ethereum, Solana, and so on. When think full bull run starts, when Gary Gensler gets fired, it'll be an indication that we're onto a better market space. Gary Gensler needs to either resign or get fired for us to see an indication of, okay, now we're moving forward. Until this man, Gary Gensler, is still the chairman of the SEC, even though he has virtually no power over any sort of cases. And if he does resign or does get fired by Donald Trump around January 20th, either way, he has no power, which is very true, because every case he touches will either be dismissed or settled. But it's still, he needs to be fired or resign for the market space to see, okay, now we can move forward. That's when we'll see a bigger move. Hello, Miles, and all you good people. Chief, good to see you. How you doing? How you been? Now, Rumble. Now, also, later on tonight's live, I'm going to be explaining that we might have a possible deadline of Gary Gensler resigning, because his buddy from the FDIC chairman, he's going to be resigning on a particular date. But we'll get to that news. Hi, Miles. This is Millie, Shelley's daughter, joining for the first time, here to learn. Millie, good to see you. How you doing? Welcome to the CMF. CMF members, M. Ross is Millie, which is Shelley's daughter. So CMF members, say hi to M. Ross. Millie, welcome to the CMF Live. So everyone say hi to Shelley's daughter. She's in the comment section. She's watching for the first time. Hi, Scott. Sorry, Sample, let's go. When he fire, I hate him. He should be fired soon anyways. January 20th is when he's going to be fired. Now, Rumble. Rumble stock rises as CEO teases Bitcoin adoption. So more companies are following the footsteps, essentially, of MicroStrategy. MicroStrategy started this wave of backing Bitcoin assets to their company, and more companies are following their footsteps. The video sharing platform, which is similar to YouTube, essentially, is moving higher during afternoon US trading hours. On Tuesday, after CEO Chris suggested an interest in adapting Bitcoin as a trading strategy. Should Rumble add Bitcoin to its balance sheets? By itself, the question might have been considered a little more than a playful tease, but it could quickly drew to a response from MicroStrategy's Michael Saylor. So the CEO, essentially, of Rumble tweeted out on X saying, should I buy Bitcoin for my company and back it as a reserve asset? A lot of people suggested yes, and one of those people were Michael Saylor. Michael Saylor essentially went on X and tweeted out and said, yes, you should be backing it with essentially your company. So this is what Michael Saylor said. He said, yes, I would be happy to discuss why and how with you, DMing you essentially right now. Prior to the exchange, Rumble stock had been trading modestly low on a lower session, but shares quickly rose about 7% gains at the press time. The stock had pulled back somewhat by up to 3.3% for the day. The price of Bitcoin essentially on Tuesday notched a new record high, crossing 94,000 levels for the first time, at least for part-aimed excitements over growing corporate essentially adoptions. A competitor to YouTube, essentially a giant YouTube company in the video sharing business, Rumble posted $25.1 million in revenues in the third quarter, up from 39% from year-on-go levels. Its balance sheet showed essentially $130 $8.8 million of cash and cash equivalents. The stock is higher by 26% year on to date, and the company sports a current market cap of roughly $1.6 billion. So, another company is following MicroStrategy's footsteps. And as I said before, corporates tend to follow each other. And this is just one company that's making all this happen. MicroStrategy has made 8 companies follow its footsteps. And the United States is going to make the entire world follow its footsteps into the blockchain space. Now, moving away from Rumble's news to very interesting news. As I said previously, when Donald Trump essentially sits on the seat and becomes the official president of the United States around January 20th, and slowly puts into progress of making America the capital of cryptocurrencies, one thing is going to be happening. More countries are going to be going towards cryptocurrencies. A lot more countries are going to be going towards cryptocurrencies. Companies, institutions, banks, every country that's been moving sluggish will go towards crypto assets. Because if MicroStrategy can make 8 companies follow its footsteps into the blockchain space, if essentially Slovenia can make the United Kingdom follow its footsteps in the tokenizations, what do you think America is going to do? The biggest market space in the world, becoming the capital of cryptocurrencies. It will make every country, every bank, every institution, every retail person jump inside the crypto space. That's what's going to be happening. We're just getting more bullish as time goes by. And as I said previously, I said even China is going to be opening its doors to crypto assets. The same country has banned crypto minings, banned crypto assets. I said even China should be opening its doors to crypto assets. Reasoning why? Because China has always been the biggest competitor to the United States market space. So China obviously can't be sitting on the sidelines while the US climbs the ladders in the blockchain space. It just makes no sense. So I said there has to be a time period where China would open its doors to crypto assets. Well, it looks like China's about to be opening its doors to crypto assets. Shanghai courts, these are first steps into the crypto asset space. Shanghai courts recognize crypto as property but bans business activities for now. The Shanghai High Court has ruled that cryptocurrencies can be essentially property attributes under Chinese laws, affirming their value as virtual commodities. This is the same China that banned cryptocurrencies. But now, because of Donald Trump making America the capital of cryptocurrencies, obviously China has to stay competitive. So what they're going to do? Well, the courts in China have ruled that cryptocurrencies are considered commodities. However, the courts upheld China's strict prohibitions on using cryptos for commercial activities such as token issuance and speculative tradings, according to the court's rulings for now. This ruling arose from a dispute between an agriculture development firm and an investment management company over the failed token launch. The case, essentially by the Songzhong District People's Courts, highlights the ongoing tensions between China's recognition of crypto as a property and its crackdown on crypto-related financial activities. The conflict dates back to 2017 during a cryptocurrency market boom. The agriculture companies referred to the company X in courts and documents sought to issue tokens and raise funds through a blockchain agreements with the investment firm identified as the company S. All of this happened because 2 companies were taken to court inside of Chinese courts, and one company claimed that they won their crypto assets, while the other one said we haven't launched our tokens. And because of this one particular case, and because of what's happening inside the United States, Donald Trump becoming president of the United States, China has decided to rule cryptocurrencies as commodities. Under the agreement, the company S was tasked with preparing a white paper visiting the token issuance using blockchain technologies. Company X paid a service fee of 300,000 yuan, around $41,000. A year later, the token has not been issued, with Company S claiming additional app developments was necessary, costs not covered under the agreements. Frustrated Company X sued to determine the contract and require its payments back. The court ruled the agreement invalid, citing China's prohibition of token issuance as an illegal financial activity akin to unlicensed, essentially public fundraisings. With both companies were deemed at fault, Company S was ordered to return 250,000 yuan of their service fees to the Company X. The court clarified that while the virtual currencies are considered property and are not explicitly banned, business activities involving them remains illegal for now. This distinction underscores China's broader policy of curbing financial instability and criminal activities tied to cryptocurrencies, such as fraud and money laundering. According to the rulings, individuals may be legally held, essentially legally hold cryptocurrencies as personal assets. In China right now, you can technically, because of this court ruling, hold your crypto assets, and it's not against the law anymore. However, engaging in crypto-related business ventures exposes entities to significant legal risks, which means essentially they're going to be bringing out rules and regulations to curb this type of scenarios. The court's decision reflects China's ongoing high-pressure stance against speculative cryptocurrency activities aimed at maintaining essentially a financial order, and the judgment serves as a warning about the legal risks associated with participating essentially in crypto transactions or launching token projects without proper authorization. Contracts found to violate financial regulations are likely to be deemed invalid, limiting essentially legal recourses. The judge overseeing the case emphasized the importance of strict compliance with financial rules to avoid such outcomes, serving as a reminder for entities navigating the legal landscape of cryptocurrencies in China. So, even China has decided to open their doors just ever so slightly to cryptocurrencies, mainly because of this particular essentially lawsuit that was going on. But the timing could also be maybe coincidental or maybe coordinated with Donald Trump becoming the president of the United States, trying to make America the capital of cryptocurrencies. At the same time, China's slowly opening their doors, making cryptocurrencies essentially a commodity, which is great to see, a property asset, in other words, which is more than you can say for the chairman of the SEC, Gary Gensler. What's interesting is the US had its doors open to cryptocurrencies for a while, and Gary Gensler did absolutely nothing for the crypto space. Gary Gensler wasted everybody's time for years and sued over 100 blockchain companies. China, because of one lawsuit, automatically put cryptocurrencies in the commodities category. Whereas Gary Gensler still cannot define what a cryptocurrency is and still cannot define if securities applies to it. Because even if Gary Gensler thinks securities applies to cryptocurrencies, he can't prove it in court. He's just an absolute moron. That's what he is. Now, moving on from China opening their doors ever so slightly to the cryptocurrency space, which I said should be happening, because America becoming capital of cryptocurrencies and China getting left behind makes no sense. These two have always been rivals. The Chinese market space has always been rivals to the American market space, so they had to open their doors because of Donald Trump. Now, moving on from the Chinese market space news to BlackRock news again. But before we go through that news, let's go inside the comment section first before we go for the next BlackRock news. As I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. I'd be more than happy to answer any questions you may have. Let's go inside the comment section first, and then we go straight into the BlackRock news. Let's see where we were. And I read everybody's comments one by one, shout out your name, and then go straight, essentially moving forward. Let's see where we were at. Let's see. I shout out your name and I read out your comments, so I don't miss out on anyone. So everyone's saying hi to Millie. That's what most of the comment section is right now. Millie was just George. Hi, Miles of CMF. Good to see you as well, George. How you doing? Everyone just says welcome, Millie. Let's go CMF for welcoming Millie into the CMF. I love your live shows. You're always keeping us up to date. I appreciate that, brother. Bert, thank you so much for the kind words. Hello, Miles of CMF. Carol, good to see you as well. How you doing? How you been? Good luck. You're in the right place. Hooked on Miles. Millie, you will do well. Hi, Miles and family. What's your favorite Persian? Mine is Woman Sabsi. Golden Dragon, good to see you as well. How you doing? How you been? You just have to work on your. Everyone's talking shade now. Thanks, CMF, for watching. Hi, Miles. MQ, good to see you as well. How you doing? I was having a discussion with a friend today about CBDCs. He's asking, what is the motivation behind it all? What's the motivation behind CBDCs? The motivation behind CBDCs is full control. So the only reason CBDCs will be happening is because they want control. Though the main reason a digital world has been created for us is the purpose of control, not privacy or essentially freedom and so on. No, it's for control. Governments want control, more control, essentially. They wanted more censorship, but they failed because Kamala Harris lost the race, which is brilliant. I've always said this, and I'll say it again. Thank God Donald Trump won, honestly, because otherwise censorship would have been through the roof. But the main purpose of CBDCs is control. They want to have a much more stronger control on the retail section. Now, a lot of people would claim that cryptocurrencies is for digital freedom, which is an absolute load of BS. Now, even Homeland Security has came out once. A member of Homeland Security came out once and basically stated that if you want to be, untraceable inside of this world, cash is your only option. He said, even if you use any type of cryptocurrencies, we can still track you no matter what it is. You can do 1,000 transactions to a different wallet and we'll still be able to track you. They said the concept of a digital world that people believe is all about freedom, digital freedom, and so on when it comes to cryptocurrencies is a load of BS. If you want to be untraceable, cash is the only untraceable asset there possibly is. Obviously, we can't stay on cash for too long because they've pretty much ruined that fiat market space for us with the inflation rates. But it's control. The whole point of a CBDC is control. Yes, it's faster payments and settlement times and so on and so on, but it's control. That's the only reason. Once I said control, he didn't believe me. Why can't so many people see it? So you told your friend it's about control and he couldn't see it? Well, those are the type of people that will be stuck on CBDCs. If you don't realize that this world is heavily manipulated, if you haven't realized by now that this world is heavily manipulated, then you're going to be stuck on CBDCs. No way about it. You're going to be stuck on CBDCs. Look, the easiest way to put it is the reason why the world is the way it is as we see it is because we have too many morons in this world. And when you have too many morons, history will always repeat itself. And a lot of things will always repeat itself as well. So if people don't believe CBDCs are for control when they are, it states CBDCs are for control, then those are the type of people that are going to be stuck on CBDCs. The only bad thing is once they realize it's going to be too late. Beam, good to see you. Scott, Beam is a great crypto project inside the gaming sector. XCN, it's an all right crypto project. It's not something I would be going for. Miles, that's very good news for crypto when two countries have competition. It's excellent news, honestly, excellent news that China and the US are becoming competitors or rivals once again inside another market space, which is crypto. Once I said, hi, Miles, hope you're well. Zach, good to see you. How you doing? How you been? I know the answer thanks to this live show. Let's go, Camel. Why some coin pumps and no pump for ETH and some for others, you tell me. Why some coins are pumping and others aren't? And why is there no pump for ETH? Well, because ETH is touched its target, you could pretty much say. Ethereum is not bringing much to the table when it comes to the ETF space. It could have brought a lot. Look, Gary Gensler gets fired. There's going to be an update. There's going to be a lot of updates inside the crypto space, but you're asking specifically around Ethereum. So what's going to be happening on Ethereum? Gary Gensler gets fired. Brilliant. What's going to happen next is there's going to be new filings for the Ethereum ETFs. And the new filings are going to be updates from the previous ETFs, which is to add staking capabilities. The moment Ethereum ETFs get staking capabilities, it's then essentially becomes an interesting asset for institutions to get involved in because they can make, income out of it. They can stake their ETFs, the Ethereum ETFs, and make an income out of it. But the Ethereum ETFs right now aren't attracting inflows that much compared to Bitcoin ETFs, which isn't helping the price point either. It's mainly because it doesn't bring anything to the table. Because high-profile investors see Bitcoin as, okay, it's got limited supply. That's good. We'll go for it. It can grow in value over time. When it came to Ethereum, it had nothing to offer. What it did have to offer was staking capabilities, which that was taken away because the SEC would not approve Ethereum ETFs with staking capabilities because of Gary Gensler. So every single ETF filing had to remove the staking from their filings for their ETF for Ethereum to be approved, which made Ethereum ETFs not appealing to any sort of high-profile investors because they saw Bitcoin as limited supply. Yes, that's good for a Bitcoin ETF. Everybody went for it. Ethereum ETFs, it didn't bring anything to the table. What it could have brought was staking. So once Gary Gensler gets fired, that situation with Ethereum ETFs will be resolved. There'll be new filings for ETFs staking capabilities for Ethereum, which should help the price point of Ethereum climb even further between institutions. Hi, Miles and family. Good to see you. Alex, how you doing? How you been? Now, moving on, BlackRock. BlackRock clarifies about US Bitcoin reserves after allegations close sources behind disappointing information. Apparently, this is where it gets also get a little bit interesting as well. BlackRock, those news spreading that BlackRock likes the idea of a Bitcoin reserve asset. It turns out it doesn't. So we all know that Trump mentioned at a Bitcoin conference, he wants to use Bitcoin to back the United States. And that Senator Cynthia Luminous wants to buy essentially 1 million Bitcoins. and she wants to sell some gold reserves to do this. So America wants to create a Bitcoin reserve asset type of scenario. However, it seems like BlackRock is not very fond of this idea, which raises a few questions, because BlackRock would positively, it would impact them positively if the United States government was going to be buying 1 million Bitcoin, which means the United States government would control 5% supply of Bitcoin. But apparently BlackRock doesn't like that. BlackRock responded to the claim made by Satoshi Act Fund founder Dennis Porter recently that BlackRock supports a street Bitcoin reserve inside the United States. A Satoshi Act Fund founder decided to come out and say BlackRock loves the idea of a Bitcoin reserve for the United States. Well, according to BlackRock, not so much. In a statement made by Eleanor Torrent, known for her accurate information, it was reported that sources close to the company said that BlackRock does not support the street Bitcoin reserve plan, despite the recent allegations that it does. Dennis Porter, who also claimed in a recent statement that he made speeches for this purpose at the congresses of 2 countries that wanted to create a Bitcoin reserve, and although he did not essentially name these countries, he claimed that one of these countries was in Europe, that's thinking the same thing as America, and the other one was in Latin America. Although Porter's claims may seem inconsistent now, he has made accurate comments in the past. For example, Porter essentially predicted that Donald Trump would promise to create a Bitcoin reserve at the Bitcoin conference. As a result, Trump made a statement about this at the conference he attended before the elections. However, it is essentially not yet known whether the reserve plan will be in question will be implemented by the US for a cryptocurrency-friendly senators continue to work in that direction. So apparently, according to one source familiar with BlackRock, BlackRock doesn't like the idea of the United States government owning 5% supply of Bitcoin. Could it be because BlackRock wants to be the one sitting at the top when it comes to Bitcoin assets? The BlackRock Bitcoin ETF is the fastest growing ETF possibly to date. BlackRock's Bitcoin ETF is doing incredibly well since it opened doors in January this year. So if, for example, BlackRock is against the United States going for Bitcoin, is it because they're going to lose their number 1 position? Is it because BlackRock wants to be number 1 and not number 2? It's the only logical possible reason, because if the United States starts buying Bitcoin, it impacts essentially 1, the retail section in a positive way, and 2, it would impact the price of Bitcoin, making it go higher, which would bring a lot of profits for BlackRock. If they're against it, it could be because they don't want the United States being the number 1 holder, because then they will be the manipulator on the price points. If the United States government is holding 5% supply of Bitcoin, and one day they decide to sell some off, it would impact the price of Bitcoin, which means it would impact the price of the Bitcoin ETFs for BlackRock. Is that the reasons why BlackRock maybe doesn't like it? But we'll get more on that as time goes by on, is BlackRock actually liking the idea or against the idea? There are 2 alternative sources. One is saying that BlackRock hates the idea of a Bitcoin ETF reserve for the United States government. Another source is claiming that they don't mind and they think it's a good idea. But we'll get an answer from BlackRock as time goes by. But if they don't like it, we can say pretty much because they don't want the United States holding too much power over Bitcoin. Now, USDT is what we're going to talk about next, because something has just been announced today. Donald Trump has chosen somebody to be in charge, or essentially as the Commerce chief. And this member is the same person that sells Tether UST bills. The competition for the role of Treasury Secretary in Donald Trump's administration is intensifying. Through Howard Lutnick, CEO of Cardano Fixot, emerged as the top contenders for the Treasury Secretary. Trump picked him for Commerce chief instead. Donald Trump, the upcoming U.S. president, prefers Howard, the CEO of Cardano Fixot and big supporters of cryptocurrencies, who has long worked with the major stablecoin company Tether, to be his Commerce Secretary instead of Treasury Secretary. Although essentially Howard was a strong contender for the Treasury role, recent reports suggest his favor for Trump has faded. His essentially proposed nomination for Commerce Secretary, despite his involvements in Trump's transition team, seems to confirm this change. Cantor Fitzgerald, headed by Howard, is a leading player in the financial sectors, especially known for its significant presence in the bond market space. The firm is one of the select few that acts as a primary dealer, authorized to trade directly with Federal Reserves. It also essentially ventured into cryptocurrency space since 2021. Cantor Fitzgerald has essentially associated itself with Tether in managing the substantial amounts of US treasuries that support its USDT stablecoin. Additionally, the firm recently launched a Bitcoin financing venture providing loans to Bitcoin investors, stating with initial investments of $2 billion. While two sources believe the decision is final, Trump has not publicly confirmed the appointments and is now essentially known for his Bitcoin last-minute changes. Now, they spoke anonymously at the announcement. It has not been officially made, but there is a lot of word going around that the next person that's going to be chosen as the Commerce Chief for the United States of America is going to be Howard. And Howard is very pro-crypto, so I thought it's a good scenario. As Commerce Secretary, Howard would be crucial in carrying out the president's economic and trade policies. The role covers a wide range of federal policies, including those related to semiconductors, cybersecurity, and patents. Howard also's connection to Tether shows the wider relationships between the cryptocurrency industry and many other individuals Trump is likely to appoint a key role in the next government. Trump has also often highlighted his backings from the crypto sectors, which now has a strong connection to the members of both political parties. He expressed his enthusiasms for crypto, especially between Bitcoin, during a CNBC podcast, stating that he only supports Bitcoin and views of other coins as insignificant, which was last year's essentially opinions. He also mentioned his strong support for stablecoins named Tether. Howard also has made the case that Bitcoin should be regarded as a commodity which would subject to a less regulation than other financial instruments like stocks or bonds. He believes that Bitcoin's lack of central ownerships and his resistance to censorships essentially will make it superior to other cryptocurrencies. So it seems like somebody is chosen for Donald Trump, essentially team. Howard, which is the same man that supplies Tether USDT, their US bonds, is going to be chosen as the commerce man, the commerce chief for the United States of America. And he's very pro-crypto. Everybody around Donald Trump that's being chosen right now to lead the next United States of America is pro-crypto. So it's great to see this. We have 200 pro-crypto politicians inside the United States market space, and the members around Donald Trump are all becoming pro-crypto as well. Amazing to see that. Now, sorry about that. Moving on. What we're going to be talking about is Grayscale. But before we talk about Grayscale's news, let's go inside the comment section first, and then we go straight into the Grayscale news regarding their new proposition for Bitcoin ETFs. And it should be bringing more to the table for Bitcoin and cryptocurrencies in general for eyes. Indirect value for cryptocurrencies, but direct value for Bitcoin. Let's see where we are inside the comment section, and we go straight into the next news. As I said previously, this is a live, which means if you do have any questions, put it down in the comment section. I'll be more than happy to answer the questions you may have. Let's see where we're going with this. Miles, same question. 1 year later, brother, shall I sell my ETH bags? Miles, same question. 1 year later, brother, shall I sell my ETH bags? No, because the ETFs will be updated, and then you'll see the difference in price. Obviously, not financial advice for anybody watching, just a personal preference. Hey, Miles, fam. Ricky, good to see how you doing. Question, go for it. Which AI is still worth and affordable to buy? Which AI is still worth and affordable to buy? AI crypto projects? Viot is still essentially a partner of IBM, and it should do well in the regulations. But look, if you want to be in the AI space, there are lots of, there's a massive list of AI companies that are all startup companies that haven't went public yet. So you could pretty much go for any of those. The majority of AI companies receiving funding, they're not blockchain AI companies. They're actually just AI startup companies that receive sometimes billion-dollar fundings. So preferably you want to look into those AI startup companies if you want to be in AI category. There are, some AI crypto projects out there as well, like Rendo and so on, which could bring a lot of money to the table. But if you want to be mainly inside the AI category, startup companies are the best option to go for. But Viot, they have a partnership with IBM, which is great. Rendo is still great in that category as well. Graph they're going towards that AI category as well. And, you know, Graph is an amazing project as well. Once rules and regulations, that's what I would say pretty much. Once rules and regulations come in, do you think XRP will be given staking capabilities? Yes. Because it's no longer going to be under Gary Gensler. For any rule and policy to be passed under Gary Gensler, that moron will waste time for 4 years just to pass one small regulation. So Gary Gensler getting fired, things will move a lot more quick inside the crypto space, incredibly a lot more quick inside the crypto space. So regarding XRP having staking capabilities, yes, because we'll have a new SEC chairman. Yes, so if I don't think there will be 1 million BTC available, as the total supply is 21 million and 19.5 million are already in circulation. Yes, they're not going to be buying essentially 1 million Bitcoin instantly. So America is not going to be buying 1 million Bitcoin instantly. They're going to be buying it over a time period. I think it's 5 to 10 years they're going to be buying Bitcoin to eventually catch up to 1 million BTC. So it wouldn't be, you know, instantly type of scenario. Also, you're right, as BlackRock are just greedy. You know, it's the only explanation I've came to of why BlackRock might be hating on the idea of the United States buying 1 million Bitcoins. But the retail, I mean, eventually they'll be able to buy 1 million. If the United States markets wanted to do that, eventually they could buy 1 million. Why is it a good idea to hold ETH or better to hold some things and sell? ETH is a great crypto project as well, brings a lot to the table. If you don't look at it from an ETF perspective, if you look at it from a different perspective, you know, it has a lot of capabilities. A lot of great projects are built up on top of ETH. Will Swift utilize XRP? Will they work with Ripple? Will Swift and Ripple work together? Now, there has been testings and conversations multiples of times regarding Swift and Ripple. There's been documentations where Ripple and Swift are stated on the same PDF documentations in the Bank of International Settlements. So the idea is, yes, they could work together. Are they going to be working together is what we're going to be seeing as time progresses forward. Are they going to become competitors or work together? But what I can say is Swift's days are numbered. Genuinely, Swift days are pretty much numbered. Because a lot of countries hate the idea of using Swift. Because on the back of their minds, they're always thinking, can we also be sanctioned as well? As I said previously, Swift is not a payment tool, it's a political tool, goes around and sanctions countries, which makes it very difficult for Swift to be used. Funky, you hold, why Cardano and Ripple partnership can offer, who can Cardano offer Ripple? What can Cardano offer Ripple is what you're saying. So there has been talks about Cardano and Ripple, which we're going to go more on detail on tonight's live as well. But Cardano can bring a lot of capabilities essentially to Ripple as well. We're going to go through these capabilities once we go through that news on tonight's live. Does this news mean that Tether is safe to hold? Regarding Howard being chosen as the commerce chief for the United States, is it safe for Tether to be held? Look, USDT for now has no issues whatsoever. Obviously, they're not allowed to be able to sell them in the under MiCA regulations inside the EU market space. But however, on those matters outside the EU, they're still able to trade on USDT. Unless some news comes out they're actually being investigated publicly, then it should be safe for the time being. But USDC is obviously a safer option because they're not being sued. They have all the compliance and regulations and licenses to move forward. Does this news mean, okay, hello, good friend, love for beauty, good to see how you doing, how you been? Miles, how are you feeling on Fred Energy and Stellar? Miles, how are you feeling on Fred Energy and Stellar? How do I feel about Stellar? I'm guessing is what you're asking. Stellar Luminous, XLM, great project, amazing project. Moving forward, it's going to do very well, especially on the regulations. ICP is building an AI for blockchain. It's true as well. Yes, ICP is doing that. Is ICP a good coin? It's an all right coin, is what I would say. Greetings, Miles and CMF. Ray, good to see you as well, brother. How you doing? So, let's go through the next news on tonight's live. Grayscale. Grayscale pushes boundaries with Bitcoin covered call ETF proposals. So we're going to get a lot of updates happening right now on Bitcoin ETFs, a lot of new filings to their original filings. And one of them is this. So according to James, the ETF Bloomberg analyst, specialist, and James and Eric from Bloomberg have been pretty much correct on the market space moving forward. They said that essentially Grayscale has officially filed an updated, essentially, ETF filings for their Bitcoin call options. The new ETF essentially will provide investors with the necessary exposure to Bitcoin and GBTC while offering more revenue generation options for Bitcoin ETFs. In its prospects, Grayscale wrote, the fund seeks to achieve its investment objectives primarily through actively managed exposures to Grayscale's Bitcoin Trust, GBTC. and the purchase and sale of the combination of call and put option contracts that utilize GBTC as their reference assets. However, the Bitcoin covered call ETF still does not have a trading code. The fund was initially proposed essentially on January 11th when GBTC started trading. At the time, Michael, essentially the CEO of Grayscale, had emphasized that the company's commitments to the growth of GBTC and its ecosystem, hinting at a plans to launch the Bitcoin covered call ETF. He even pointed out on how helpful it could add to the income of Bitcoin for investors. Grayscale's prospect submissions comes just 1 month after the SEC accepted change to its ETF listing rules. The Securities and Exchange Commission have approved a rule change on October 18th, allowing the New York Stock Exchange, essentially, and the Chicago Board Options Exchange to offer options trading for multiple spot Bitcoin exchange-traded funds. The rule change comes as a relief, essentially, who can now have their funds listed. Moreover, the Options Clearing Corporation, OOC, announced essentially that it was gearing up to facilitate the clearing settlements and the risk management of spot Bitcoin ETFs following the CFTC staff advisory. ETF analyst Eric also interpreted this as a signal that US exchanges listing essentially these crypto investments and vehicles are eventable, saying that the listings was only a matter of time of when. Grayscale is also collaborating with the New York Stock Exchange and Akara to earn approval to list a range of ETFs that are not necessarily Bitcoin related. Grayscale apparently is getting ready to list a lot of alternative crypto assets as ETFs. I'm guessing they're waiting for Gary Gensler to either resign or get fired before Grayscale's new filing starts for their alternative ETFs. But Grayscale has made an update to their Bitcoin ETF, which means Grayscale is trying to get listed on NASDAQ. The more the ETFs, Bitcoin ETFs or alternative essential ETFs get listed on the NASDAQ, the more exposure they're going to be having towards institutions. More exposure means more money, more cash inflow to Bitcoin ETFs, and essentially means more cash inflow indirectly towards other crypto assets, because institutions having exposure to Bitcoin brings direct value to Bitcoin, but it will also bring indirect value to the blockchain space on other assets as well. Now, moving on from essentially Grayscale's new filing of their Bitcoin ETF to the FDIC chairman, Weasel number 2. Now, Weasel number 1 is Gary Gensler, the SEC chairman. Weasel number 2 is the FDIC chairman. You see, the FDIC chairman has decided to resign. Why is this important? Well, because Gary Gensler has been stifling the cryptocurrency space by suing them. The FDIC chairman has been stifling the banks from getting involved in crypto assets. In fact, the FDIC chairman has sent over 20 emails to multiple of banks inside the United States telling them to stay away from crypto companies. And this man is resigning now. Could this be an indication of Gary Gensler's resignation date as well? Because the date this man has decided to resign is an interesting one. The FDIC chairman to resign as Trump wins and crypto scrutiny. Government actions tied to a sweeping anti-crypto operation are rapidly unraveling weeks before Republican President Donald Trump takes office. Everybody who was anti-crypto, everybody who was trying to stop progress of blockchain inside the United States is leaving one by one their positions inside the United States government. Martin, the chair of the U.S. Federal Deposit Insurance Corporations, announced plans to step down. He's stepping down from his position when, you may say, January 19th, 2025. One day before Trump takes his seat around January 20th. So Trump is taking his seat January 20th, becoming the president of the United States January 20th, done deal. And Gary Gensler gets fired. January 9th, if he hasn't resigned by then. January 19th, one day before Trump takes his seat, is when the FDIC chairman is resigning. This man has stifled the crypto space at an unbelievable rate. He is the reason banks inside the United States didn't want to get involved in crypto because they didn't want to operate in gray areas. When you operate in gray areas, you get sued. He's the reason why institutions were having difficulties getting involved more inside the crypto space, rather essentially moving on beyond Bitcoin ETFs. And it's these three people that have been stifling the cryptocurrency market space inside the United States. One, Gary Gensler, Weasel number 1. Weasel number 2 was the FDIC chairman. And Weasel number 3 is Senator Elizabeth Warren. Gary Gensler is either going to get fired or he has to resign. FDIC chairman is resigning on the 19th of January, and Elizabeth Warren is the only weasel still standing. But it goes back to that old quote. And then there was one, which means she has no capabilities. But he is resigning. And this could be also an indication of maybe Gary Gensler resigning on the 19th of January, and 20th of January, Trump takes his seat. So this weasel, Morton, thanked the agency staff for supporting his career as the longest-serving FDIC board member. He joined the regulators in 2005, raising to a chair position under former President Barack Obama and Joe Biden, also weasels. FDIC chairman, or morons, FDIC chairman Morton was reportedly instrumental in a multi-agency blockchain crackdown dubbed Operation Choke Point 2.0. People with knowledge of the matter, like Nick Carter, publicly said the QCP 2.0 threatened to block crypto businesses from using traditional banking services. And the only reason we know that this man was stifling banks from working with crypto companies is because a member of Congress came out and said that the FDIC chairman is part of an operation that's anti-crypto, and they're choke pointing cryptocurrencies. Industry titans like Coinbase sued the FDIC over these allegations, and the case was ongoing as of November 19th. Digital asset essentially supporters and blockchain-friendly legislators welcomed Morton's upcoming resignation. This is overdue, but welcome the news that he's finally leaving. Morton's resignation marks another apparent victory for the digital asset industry. Following Trump's elections, several crypto skeptics, also and regulators, have announced that their departures are hinted at stepping down. Everybody who was anti-crypto inside the United States has to pretty much resign before January 20th. If anybody's anti-crypto inside the United States government and is planning on staying after January 20th, they will be fired. It's Donald Trump. This man will fire anyone. He doesn't care who you are or what position you're sitting in inside the United States government. You're getting fired. Morton's resignation marks another apparent victory. And Securities and Exchange Commission Chairman Gary Gensler is also rumored to be considered resignations before Trump's essentially swearing in into office. Additionally, the U.S. Attorney Damian Williams, who heads the Southern District of New York Prosecutor's Office, plans to leave his post as well. Both officials were essentially key figures in aggressive enforcement actions against blockchain and companies and crypto startups. The Southern District of New York's Prosecutor Office is also stepping down. Yesterday, I shared news that New York is going to be backing down from suing crypto companies. I shared the news yesterday on this live that New York is going to be stepping down from suing crypto companies. They're going to be backing off completely. Now we know the reason, because also the New York prosecutor is also going to be stepping down. Both officials were key figures in aggressive enforcement actions against blockchain companies and crypto startups. Former SEC Chair Jay Clinton is reportedly being considered as a replacement for Williams at the New York Century office. And however, Trump's choice for the next SEC chairman remains unclear. Details about Morton's successor at the FDIC chair were essentially limited following his announcements. However, the FTC chair, Travel Hill, essentially could be a crypto-friendly option. In March, Hill pushed for easing banking restrictions on digital assets and urged the FDIC to adapt a neutral stance towards blockchain technologies. There are members essentially inside the FDIC chairman that are pro-crypto, but unfortunately their bosses are complete tools. Gary Gensler is an absolute tool. Everybody around them is technically pro-crypto inside the SEC. Well, yes, you do get a few of those ones that, beg friend the boss, but the rest of the people are genuine good people that prefer crypto assets. And also the FDIC chairman, being an absolute weasel, around them are actually good pro-crypto people inside the FDIC chairman banking ships, which should be bringing a green light to crypto assets, to be fairly honest. But yeah, he's resigning on January 19th. FDIC chairman resigns on January 19th, which means banks can become pro-crypto. Banks inside the United States can then officially hold crypto assets, and not as liabilities on their balance sheets, but actually hold crypto assets, or start accepting cryptocurrencies, or start working with cryptocurrency companies, because they couldn't, because this little weasel FDIC chairman wouldn't let them. But he's resigning on January 19th. I'm guessing, knowing Gary Gensler, if Gary Gensler doesn't resign anytime soon, He's probably going to be resigning at the same time as the FDIC chairman, or he's going to be resigning about 5 minutes before Donald Trump takes his seat. Because you know Gary Gensler, the man sues a company 5 minutes before into the appeal. So you know where Gary Gensler stands. You can't get more of an annoying, sabotaging person than Gary Gensler. Now, moving on from Weasel number 1 and Weasel number 2, and then there was only one left, which is basically the Senator Elizabeth Warren. But Senator Elizabeth Warren, she's by herself now. Good. Her two best buddies are leaving her. Chairman Gary Gensler and Martin, FDIC chairman. But, you know, it just goes back to that old quote. And then there was one. And she has no power. What can you recommend to me? Let's go to the comment section before we go through the next news, which is regarding El Salvador. So before we go through the next news, if you do have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. As I said, this is a live, which means if you don't be shy, if you got a question, go for it in the comment section. Let's go through the comments, and then we'll go straight into the next news, which is regarding El Salvador. Greetings, Miles and CMF. Ray, let's go, brother. What can you recommend me to looking at a new coin with low prices? Look, you don't need to be looking into new crypto projects with low prices, because there are still genuinely great crypto projects out there that are incredibly undervalued. XDC is incredibly undervalued. XLM is incredibly undervalued. XRP, it's still undervalued for what it's going to become. ACH is still incredibly undervalued for what it's going to become. Hulo is incredibly undervalued for what it's going to become. Hot token, incredibly undervalued for what it's going to become. And there's another crypto project that I'm going to be sharing on tonight's live as well as we go through. That is an interesting one to look into. But there are still genuinely great projects out there that are undervalued. And XDC is one of them. HBAR is undervalued still. XLM is undervalued. What's up, brother Miles? How are you? Billo, good to see you, brother. How you doing? Just got in. Did I miss any bullish news? We went through data reports. Yes, some bullish news you missed out on. We went through data reports as well. Miles, you make me laugh. You make me laugh as everyone is either a moron or a weasel. He's a moron and she's a moron and a weasel. I didn't know how it works in the US, but is there... okay, I didn't know how it works in the US, but here it would be more beneficial financially to resign than get sacked due to payouts and etc. Yes, true. But the longer these men stay at their post, the higher the chance of suings is going to be. So the longer Gary Gensler, because they've messed up too much. So Gary Gensler has effed up too much, and so has the FDIC chairman. So has Senator Elizabeth Warren, to be fairly honest, but somehow she always gets away with it. But the SEC chairman, Gary Gensler, has effed up too much, which means he either has to resign, or the longer he stays in his position, the higher the chance is going to be for him to be sued. So that's where the issue lies from. So the FDIC chairman resigning is actually a good idea for him because he won't be sued. Because if he tries to stay and Trump is announced essentially January 20th, you know, he's sitting on his seat. Trump is now the president of the United States, January 20th. And this man, the FDIC chairman, is still in power. Trump is going to make a public announcement of firing him. And then most likely he's going to be sued as well. So it's not like these people are, obviously it's better to essentially get fired because you get to go home with a severance package. But in reality, it's just the type of people these people are. It's better for them to resign and walk away rather than getting fired and sued. That's where the issue lies. So yeah, I do agree with you, Shelly, 100%. It is always better to essentially, I don't know how it works in the US, but here it would be more beneficial financially to resign than to get sacked. I read it the other way around, due to payouts. Yeah. They're all stepping down because they don't want to get investigated. That's what the issue is as well. They're all essentially going to get investigated 100%. Now, Gary Gensler most likely will still get investigated even if he does resign. But no, in the US, if you get fired, you get paid out. So it's different. So in Australia, if you essentially resign, it's better for yourselves. But in the US, they get severance packages if they get fired. But Gary Gensler is going to get sued if he stays that long. So is the FDIC chairman. They're all stepping down because they're going to get investigated. Miles, is it true the weasel Gary holds a big bag of XRP? No, I don't know. I'll be honest with you. Does Gary Gensler hold XRP or hold any sort of crypto assets? Preferably, I couldn't tell you yes or no, to be fairly honest. But I mean, he is a weasel. You never know. Stifling the price for his own essentially profitness. They're all stepping. Gensler had his eye on the treasury job. He's got absolutely no chance now. That's true as well. Gary Gensler wanted to become a US Treasury. That's never going to happen. Of course, and which news did I miss regarding XRP? No, XRP news towards the end. You're still good. Hi, can you explain how I would borrow against my crypto? Who would lend? How to make repayments? Presuming a large loan, etc., etc. Thank you. John, no problem. The easiest way to borrow against your crypto assets, one platform essentially right now that's regulated inside the United Kingdom as well, is Nexo. Nexo is regulated inside the United Kingdom, for example. They're regulated by the FCA, the Financial Conduct Authority, which means you can borrow against your crypto assets. If you want to skip taxes in a very legitimate way, if you want to skip taxes, not pay any sort of crypto taxes, which nobody likes the idea of paying tax. There's not a single person on this planet that goes, yes, I love paying taxes. Nobody does. So if you want to skip it in a legitimate way, what you should do, essentially, not financial advice in any sort of way, but there are banks right now that are offering this service and to institutions for now, but they'll be offering it to the retail section as well. And there are a few crypto platforms that do have licenses. Nexo is one of them in different jurisdictions. So what you do is you put your crypto assets and essentially use them as collateral. You would go to a bank like HSBC Bank. HSBC Bank, you would take your crypto assets with you. You would transfer your crypto assets into the bank's accounts. Now, the banks will obviously be holding self-storage, essentially high-grade self-storage wallets that are designed by IBM, essentially on Ripple and Metico. HSBC is one of these banks that uses it. So you would transfer your crypto assets to HSBC. HSBC will then borrow you money based on your crypto assets. They're not going to be borrowing you money on a one-to-one ratio, but they'll give you good rates. But the more you start borrowing from the same bank, the better the relationship you will have with the bank, which means the higher essentially loans they will give you because they know that you'll repay it back. Now, obviously, you'll be paying a small fee to the bank as well, but it's getting much more smaller than you paying taxes, or crypto taxes in general. So if you use your crypto assets as collateral, you don't pay tax because you can't get taxed on debt. So if you go to any bank, for example, HSBC, where they're going to be offering this service, you go there, you take your crypto assets and you say, this is how much crypto assets I have. And you're saying a large amount. Let's say if you have $10 million worth of crypto assets in XRP or Bitcoin or whatever you may have, you go to the bank essentially and say, you know, I have $10 million and I want to borrow against my crypto assets. The bank will tell you, well, we'll take your $10 million in as collateral for your crypto assets and we'll borrow you $5 million. The bank is not going to be borrowing you essentially $10 million on a one-to-one basis ratio because it makes no sense for the bank. If you give the bank $10 million, they'll probably give you $5 million. If it's the first relationship you're going to be having with that bank, you build on that relationship, the bank will give you more and more and more. You need to build that trust with your bank advisor, essentially, your financial advisor from whatever bank you may use in the future. Well, that's what basically the case is. And once they borrow you that money, you can't get taxed on that money. You can't get taxed on your crypto assets because you use them as collateral and you don't pay tax on debt. So you're tax-free with your crypto assets. Right now, there's a company in Wall Street that is offering the same service to institutions for their Bitcoin ETFs. This company has ranked in over $1 billion over Bitcoin ETFs and some Bitcoin as well. They're borrowing to the entire Wall Street. Nobody in Wall Street right now who owns Bitcoin ETFs is paying taxes. There's not a single institution right now, a single high-profile investor in Wall Street paying any sort of taxes on their Bitcoin ETFs because they're all using this one particular company in Wall Street and borrowing against their Bitcoin ETFs, use them as collateral to skip on tax. That's just what you should be doing. So there are loopholes within every law for you to be benefiting, and they're there for you to abuse, essentially, these laws, these loopholes. Only people, legitimate people, only people from the retail section would essentially be paying any sort of taxes. There's always a loophole if you know what you're doing to skip on taxes in a very legal way within the law. But that's how you would do it, step by step. Step 1, go to HSBC Bank. Step 2, use your crypto assets as collateral and the bank will hold it for you. Step 3, borrow against your crypto assets. Step 4, use that money for the best ROI, return your investments. You know, go into real estate or something that you can pay back the loan with. The moment you pay it back, step essentially 5, borrow again, and same on repeat. Just repeat the same cycle on repeat. Also, one other thing you can do as well, for example, let's just say you go to the bank and you have XRP. Let's just say, for example, you go to the bank and you have XRP. You put your XRP with the bank. XRP goes up in value. You borrowed here when XRP was, for example, sitting around $5. And then the essentially price of XRP goes up to $10. For example, you can go back to the bank and borrow again and pay back your original loan and then carry on, repeat and rinse the cycle. And again, you'll be paying no taxes. So if the price of your assets increase, you can go back to the bank, borrow again, pay off your original loan and live off of your new loan. The price of the asset goes up again, borrow against the essentially original loans and just repeat the cycle. And you never pay tax. Not a single penny of your money will go towards tax. And it's all legitimate. Miles did send you DM after you said, let me know if you can also have my WhatsApp. No problem, below. I'll let you know for the video call. Miles, what's the minimum to hold for financial projects? What's the minimum to hold? Whatever your budget is. You know, as I said previously, if you have a small budget, then obviously 2 to 3 crypto projects is more than enough. If you have a medium-sized budget, you can stretch it to about 8 to 9 crypto projects. If you have a large crypto budget, go wild, do whatever you want. I'm in Australia. Would it be the same there? So I make the repayments out of a loan I took, as I'm thinking the repayments will be large. Should be the same, but there are no institutions right now in Australia offering the service. So once the banks essentially offer this service in Australia, then they will lay out essentially your terms and conditions. So your terms and conditions will state how much you're paying back, how much you can borrow, how much you can put down as collateral and so on, and how they're going to be safeguarding your assets in case of hacking scenarios and so on. So once that does happen in Australia, you will have a better idea on that matter. But they're not offering that service right now in Australia, but they're going to be offering it by next year, most likely, because a lot of countries are going to be offering that service by next year. Hong Kong is offering that service already, so is Dubai. The UK is looking into it. Obviously, you know, the city of London is the capital of washing money. Let's just say it's a province by itself as well. But once that service is going to be offered next year in Australia, they're going to be handing out terms and conditions. All these banks are going to be offering the service. You should have a better idea on that matter. Bowers, I'm coming to my end of the year accounting, and the accountant is asking if I have any investments in cryptos or shares. Do I need to declare it? Whoa. Obviously, paying your taxes is a good idea. Do I need to declare? That's, you know, I don't know if you have any crypto assets, you know. Funky brother, you're asking me a question that I might not know the answer to. You're asking me the question of, Miles, I'm coming to my end of year accounting, and the accountant is asking me if I'm holding any investments in crypto or shares. Do I need to declare it? I don't know if you hold crypto assets if you want to declare them. What do you call small, medium, or large? Small investments is, depends. Look, if you're not borrowing against your, okay, let me just say this. If you're not borrowing against your crypto assets, funky brother, and they're sitting there in a wallet, for example, if you're holding crypto assets and Binance Exchange will snitch on you. Let me just put this in perspective. Binance Exchange will snitch on you in 5 seconds. When the time comes, they're not snitching right now, but they'll snitch very soon or later. Uphold will snitch. The only crypto exchange that doesn't sing like a bird is MEXC Exchange. The only exchange that doesn't sing like a bird is MEXC Exchange. The rest of the crypto exchanges, if you're holding crypto assets on them, they sing like a bird. The Tangent wallets and essentially Ledger wallets, they're not going to be singing like a bird for now, but later on they sure will be. Now, because when you buy a Tangent wallet, you're going to be typing in your house address, your name, and your bank details when you buy a Tangent wallet, which means Tangent will have all your information once the tax man comes knocking on their door and says, can we have a list of people that have bought wallets from the United Kingdom or Australia or Japan or whatever? And Tangent will go, no problem, here's a list of people from your jurisdiction that have bought Tangent wallets. Or same scenario with Ledger, the UK can go to Ledger and say, you know, come with a list of people that have bought Ledger wallets. So even if you're holding cold wallets or hot wallets, it's difficult to tell. So if you're holding your crypto wallet, if you're holding your crypto assets on Trust Wallet cannot snitch on you in any sort of a way. However, if you use your bank cards to buy crypto assets through Trust Wallet, then the banks might snitch on you instead. So there are scenarios of where some certain things can lead back to you. But yeah, MEXC doesn't snitch. The rest do. So keep that in mind when your accountant is asking you questions. But those exchanges are going to be revealing information about 2 to 3 years' time. So Binance, Crypto.com, Coinbase, and a few other exchanges, they're going to be revealing all that information, not this year, not next year, but the year after that. They're going to be releasing all that information. So when that time comes around, if you're still sitting in the same country, it could look very bad for you. Hope that helped. So when your accountant is asking you, do you hold any crypto assets that you want to declare? The choice is yours. What do you call small, medium, or large? A small investment is 1 to 5. A medium investment will be above 10 to 25 to 30 or 50. And a large investment will just be, 50 to 100 to 200,000, so on. So that's why I say go wild. But actually, 1 to 10 can be considered small investments, or 1 to 10 small investments, and 10 to 50 is a medium investment, and 50 to 100 is considered to be a large investment and above. HSBC out of Singapore or wait to Australia has HSBC out of Singapore or wait to Australia has regulations. Okay, so should we go for HSBC in Singapore to borrow against your crypto assets, or wait for Australia to bring regulations? You can borrow against different organizations based in different jurisdictions as long as they have licensing, and HSBC has licensing, so why not? I personally wouldn't wait for my own jurisdictions if I had the option as well, but some just prefer for them to be in their own essential jurisdictions before they borrow against the crypto assets. But yeah, you can technically do that if the bank allows it. So if HSBC Bank in Singapore accepts, for example, Australian residents to borrow against their crypto assets, then why not? If HSBC Bank allows that to happen, then why not? Because if they're offering that service, then it's good to go. So not necessarily you have to wait. If they offer that service to Australian citizens or to any other citizens, then why not, I would say. Because I'm going to be doing it in Hong Kong, so preferably I'm going to be doing Hong Kong or Singapore or Dubai. So and I'm a British citizen, so I hold. So why not, Shelley? It's an option, definitely. You can go to outside the Australia and do the same scenario. If the bank allows it, why not? I hold. You need to declare your assets above 50. You need to declare your crypto assets above 57,000. If you don't do that, you will get a big fine. It is true. You in Holland, you're saying this. It is true. Obviously, if you don't declare your crypto assets, you can get a massive fine. That's very true. You can also get a prison sentence as well. Obviously, you never want to go against, essentially the government or go against the tax man. If you're not borrowing against your crypto assets, then they're just sitting there. And if they're sitting there in high numbers, then you could be liable for tax. You could also be liable for massive fine as well, or a prison sentence. So it depends on your own jurisdictions. But yes, you can get fined. But those exchanges will be singing like a bird in about 2 to 3 years' time. But if you had under that, you have also sent something. But I don't think because I want to never cash out, but pays things with XRP later. Fair enough. Miles, I meant, and for example, how much XLM is good to hold and XDC ACH the minimum? Oh, that's what you meant. How much is good to hold for XLM? XLM is incredibly cheap. I mean, look, whatever your budget is entitled to. So even if you're holding a small portion, of XLM, you're still good to go. If you're holding a small portion of XLM, XDC, or ACH, you're still good to go. You don't need to be basing on, I have to be holding minimum this amount of ACH, or minimum this amount of XLM, or minimum this amount of... Look, whatever you are capable of holding is good to go. Don't worry about it. As long as you hold out longer than the rest and realize that you're buying it for long-term prospects based on utility, you're good to go. You can outpace people who are holding more larger amounts than you. So whatever your budget is entitled to, you're perfectly fine. Don't worry about it. Even if you're holding a small amount of XLM, XDC, and ACH, you're still good. But preferably, if you have a small budget, for example, XLM would be the better choice to go for, and then XDC, and then leave ACH towards the end. So if you have a small budget, focus more on XLM and XDC, and then ACH. I didn't realize you were a British citizen. Thanks for clarifying that. No problem, Shelly, anytime. I only declare when I sell, right? You only declare when you sell, right? No. You're supposed to declare whatever crypto assets you hold. You're not only supposed to declare them when you sell them. You're supposed to declare them outright. Miles, I hold the large hands, and since Trump has won, the hands have become even bigger. But I have not cashed out since last year. Then you have to check based on your jurisdictions. You'd have to check based on your jurisdictions. Go to your government websites and check on your jurisdictions of declaring crypto assets and up to how much we do have to declare. Each jurisdiction will have a different set of rules. Some jurisdictions will say if you're holding above a certain amount, if you've held it for 1 year above, this is how much you're paying, and so on and so on. So each jurisdiction would have some different regulations going around. But tax is a very risky subject because, obviously paying your taxes, not getting fined or going to prison is a very risky subject. So we have to declare by New Year's. How about you, Miles, in the UK? How about me? Am I declaring my crypto taxes? I don't hold any crypto, so if we don't cash out, we don't have to pay tax, right? Yeah. If we don't cash out, we don't have to pay tax, right? Depends on your jurisdiction, Chief. It depends on your jurisdiction. Miles, I'm in London. Funky brother. I think I will get around 13,000 XLM next year. Then I go into XDC and ACH. That's a great amount. 13,000 XLM is a great amount, but never share the amount of cryptocurrencies you're going to be holding. But even when you declare it, will they make it difficult for you to enjoy your money and get away from the country? Yes, they'll make it extremely difficult for you. Some countries are going to be taxing you 40% on your crypto assets. Some will tax you 30%. Some will tax you 21%. But yeah, it's a very risky subject we're talking about here because some people might not want to chat to you funky privately. Yeah, that'd be a better scenario. Tax is a very risky subject. How do you hold nothing? Someone else's name. How do you hold nothing on someone else's names? Bill, risky subject. So moving on to El Salvador. El Salvador debuted its first tokenized US T-bills, offering sources. But the only thing I can tell you is you're going to be essentially, the easiest option is to borrow against your crypto assets. Okay, if you borrow against your crypto assets, use them as collateral, you don't pay tax. Other than that, you're paying taxes. 40%. What? Yeah, some countries are offering 40% of taxes. Miles is my name. Let's keep on going. El Salvador. El Salvador debuted its first tokenized US T-bills offering sources. El Salvador has finally embraced its first tokenized US treasuries offering after being one of the most pro-crypto nations. The offerings will be offered through NextBridge, a digital asset issuer essentially specializing in tokenization of financial assets. So El Salvador is very big inside the cryptocurrency space. They're very big on Bitcoin ETFs as well. And essentially, they're going to be offering US T-bills, which is something they should have headed towards. Tokenized US treasuries are already doing well in the markets. Choosing to come to the crypto hub, El Salvador is already a great step. Reports say that it recently won a digital asset service license from the local regulators as it teamed up with the Bitfinex Securities Exchange. They will be recorded as the first to offer regulated public tokenized T-bill offerings in El Salvador, according to the press release that was released today. And the new product aims to give individuals and organizations who essentially were previously unable to invest in these kinds of products access to T-bill investments. NextBridge specializes in the tokenization of financial assets, and today they have announced the launch of USTBL, the first regulated offerings of tokenized US Treasury exposures built on blockchain technology. The initial offerings has a soft cap of $30 million, and this will provide investors with essentially efficient access to the US in terms of treasury returns through regulated digital asset structures. And Michelle, Michelle, the founder of NextBridge, said, "We are establishing a new standard for how financial markets can operate in the digital age." She further essentially explains, by leveraging Bitcoin's technology and infrastructure, we're laying the foundation for a globally accessible financial ecosystem, bridging tokenized US treasuries to investors worldwide while maintaining a full regulatory compliance. NextBridge offers under El Salvador's digital asset law, which is known to provide the clearest regulatory frameworks for tokenized securities and regulatory frameworks for tokenized globally, essentially on a basis. USTBL is a fully compliant digital asset, and therefore alignment blends traditional financial securities with blockchain decentralized advantages. So El Salvador is going to be offering essentially T-bill services, not just institutions, but even to the retail section. It's something that hasn't been offered to much of a retail sections type of scenario, but it is going to be offering essentially those types of services in El Salvador. It's the first Latin American country to be doing this, and they're very pro-crypto, they're very pro-Bitcoin, they're very pro in terms of crypto regulations as well, and expanding on that field. And now they're going to be offering US T-bills through NextBridge. NextBridge does not offer some sort of a crypto platform for the time being, but they are a blockchain platform that don't have a token yet. So it could be something that you want to keep your mind sights on. Maybe NextBridge somewhere within next year releases their own token. They have a blockchain, but they haven't released any sort of tokens yet. So keep that on your books as well regarding NextBridge. Now, moving on from essentially El Salvador and their TUS bills to, we are in a paradigm shift, is a speech made by Mike Novoscott. Mike Novoscott is a billionaire, the owner of essentially Galaxy Digital, and he's sometimes slightly a moron, but sometimes brings out some good advice. Why I say sometimes he's slightly a moron is because this man was trying to vote for Kamala Harris and was telling everybody around him to essentially vote for Kamala Harris, because he assumed that Kamala Harris was pro-crypto, even though when you had a pro-crypto candidate like Donald Trump screaming from the top of his lungs, "I am pro-crypto," while Kamala Harris was silent on the matter of cryptocurrencies, Mike Novoscott still claimed that Kamala Harris was more pro-crypto than Donald Trump. I don't know how physically or mentally that could be any sort of way possible, because one president candidacy was screaming from the rooftops, "I am pro-crypto," while the other one was silent on everything. But Mike Novoscott, the moron, voted for her. But obviously his company did very well with Trump coming essentially into power, Trump becoming president of the United States. And as I said previously, thank God Donald Trump won. Otherwise, we would have been absolutely effed for about 4 years. But Mike Novoscott, he said, we are in a paradigm shift. Now, the reason why I just give you a small little background on Mike Novoscott is because sometimes he comes out with good opinions and sometimes he comes out with very moronic opinions. According to Galaxy Digital's boss, Mike Novoscott, the cryptocurrency market is currently flashing some sort of warning signs. The billionaire has essentially mentioned that the funding rates are sky high. Funding rates are the fees that cryptocurrency traders pay based on the gap between the spot and futures markets. High funding rates typically indicate that the overall market sentiment is bullish, and that the vice versa. Bulls have to pay more in order to be able to maintain their long positions. According to data provided by cryptocurrency analyst platform CoinGlass, the current Bitcoin funding rates range from 0.0176% and Binance to 0.0725%. These rates are notably higher when compared to less volatile market conditions, and cryptocurrency traders are anticipating more volatility in the near future. The launch of essentially Bitcoin ETF options emerging as a major catalyst for Bitcoin to be reaching a $100,000 number. According to Bloomberg, Nasdaq listed options on BlackRock's $30 billion IBIT ETF early this essentially Tuesday. In a recent social media post, Mike Novoscott described the launch of the ETFs as a paradigm shift. That's the big story. Will be interesting to see how fast retail starts punting. We are in a paradigm shift, he said. IBIT has already recorded a few hundred millions in options and volumes, according to leading ETF analyst Eric. Vital Lud of K33 Research believes that spot Bitcoin ETF options are a clear catalyst for Bitcoin essentially bulls. A clear catalyst with the IBIT options launch creates a solid setup for 100,000 attempt shortly, he said. And the leading cryptocurrency is currently changing hands at $92,418, just 1.3% away from its record high. So, Mike Novoscott is coming out with a interesting opinion, you could say. He claims that, which is true up to a certain extent, to be fairly honest to Mike for once in his life, it's true up to a certain extent. Mike Novoscott stating that there are too many long positions on the market space, which means that the exchanges will be have to paying out and the fees are going to go higher for the long positions. When there are too many long positions and people are doing leveraging essentially 50x or 100x or 150x on leverage positions on futures market spaces, it means that the exchanges have to pay out those big bucks. Sometimes some exchanges collectively together manipulate the market space by bringing it down so they don't have to pay out. When there are too many short positions open inside the market space, the market will get liquidated. The short traders will get liquidated because the exchanges don't want to pay out. When exchanges don't pay out, they technically manipulate the market space, so they have to short the market space. When there are too many long positions on the market space, the same thing plays out. It's true. When there are too many long positions on the market space, exchanges manipulate the scenario so they don't have to pay their 50x, 20x, or 150x positions out. The amount of people that have long positions open right now is ridiculously through the roof. And those exchanges will not have enough money to pay out all those people when they do decide to cash out, probably around about the same time. So sometimes the liquidation process is because exchanges don't want to pay out that money. And the same scenario plays out the other way. You know, if the market is being shortened up and too many short positions are open on the market space and people have got shorts going on for 20x, 50x, 150x and so on, the exchanges are not going to be paying out those types of money. Some people can, walk away with their money if they're too greedy, but the majority of them will be liquidated because the exchanges are not paying that money. So what Mike Novoscott is trying to say in a way is that there are too many long positions open. And it's going to get worse because Bitcoin ETF options are going to be opening up in the NASDAQ. Bitcoin is definitely going to be reaching $100,000 now because Bitcoin is going to be offered on the NASDAQ. Bitcoin ETFs and options is going to be offered in the NASDAQ. And because of that, Bitcoin will definitely reach $100,000 this year, guaranteed now because of that. Mike is trying to say that because this is happening and that Bitcoin is going to be reaching that price point, means more long positions are going to be opening, which means it's going to put a massive strain on the exchanges and that the exchanges are going to have difficulty paying out those 50x or 150x long positions because that's Bitcoin ETF options on the NASDAQ is going to be the next catalyst to push Bitcoin up, is what he's saying, which it is. Bitcoin ETF options on the NASDAQ is definitely going to push Bitcoin higher because it's going to produce more exposure for institutions and also provide indirect value to alternative crypto assets. But it's going to provide direct value to Bitcoin, which means more long positions, which means more people putting 100x or 20x or 50x or 150x or whatever they want to put. And exchanges are going to struggle of where they're going to get that money from. And sometimes exchanges come together to liquidate the market together collectively because they can't pay that money out in any sort of a way. And as I said, the same scenario plays out the other way. If there's too many short positions, everybody gets liquidated. So that's what Mark is suggesting. Sorry, not Mark, Mike. Mike Novoscott, the billionaire from Galaxy Digital, CEO of Galaxy, the founder of Galaxy Digital, a blockchain company, this is what he's suggesting right now. That we're going for a paradigm shift, and he said warning signs. Is Mike going to be correct? Only time will tell. Pretty much. Now, moving on from Mike Novoscott's perspective on the market. Look, consider it as an outcome, but don't consider it as the outcome. What Mike has suggested could come true. It happened in the past before, multiple times. But what Mike said could not also be true in any sort of a way. I mean, not happening, because we can side curve it in some sort of a way. If more money is entering into exchanges, then exchanges will have more liquidity to pay out people, and the market will further on go into a bullish side. So that could also be a possible outcome as well. So consider what Mike said, not the outcome, but an outcome if you want to consider it. Because if more money start entering the crypto exchanges, then they're perfectly fine paying out those people. Now, but that Russia and Ukraine situation might have an impact on the crypto space as well, because it's escalating again. Before we go on to the next crypto news, which is actually quite an interesting one, let's go inside the comment section first, because the next news is quite interesting, but we'll go through the comment section first before we go through that news. As I said previously, if you watch this for the first time ever, this is a live, which means get involved inside the comment section. If you have any questions, put it down inside the comment section. More than happy to answer the questions you may have. Let's see where we were at. We are at... here we are. I only declare what I sell. Can we have a risky subject live on another platform? CMF, you can ask these questions to Mouse in DM in the CMF. I agree. Thank you, Shelly, for pointing that out. Regarding tax information on crypto assets, because it's such a risky subject, we'll discuss it somewhere else regarding tax matters. Thank you, Shelly, for pointing that out, for saying that inside the comment section. A one-off. How about Canada? Same scenario, direct message me. But if I'm not selling, how can they tax me? Because they're going to tax you on capital gains. You sitting there making profit, you're going to get taxed. I'm planning on to only borrow. Good scenario. Borrowing against your crypto assets, you pay zero tax. It's very legal as well. Which country is 40% tax? Italy was suggesting 40% tax. So something has to bring the market down then. Pretty much is what he suggested. Mike Novoskor is suggesting something has to bring the market down. Otherwise, the exchanges are going to have difficulty paying people out, which is true up to a certain extent, to be fairly honest. This happened before. Right now, it's 5 billion in short. That's good, because then those people get liquidated. Now, you could say this is a number one question inside the crypto space. Going into a digital world, there is one major difficulty: keeping your assets safe. Because the last thing you want is to get hacked. Imagine, you build this massive crypto portfolio and you get compromised. You get hacked. It's the last thing you want that to happen to you. So, there is a crypto project that is backed by quite a lot of VC companies, venture capitalists. Forta. Forta is also on CoinMarketCap as well. And today it was up 30% because of this news. Forta Firewall launches to enhance smart contract security. Forta Firewall, backed by A16Z, launches to prevent smart contract exploits, using AI to block malicious transactions and enhance security across Ethereum networks. So, Forta, a crypto project that can help prevent essentially malicious attacks or hacks on crypto transactions on Ethereum's chain, launched today. Forta, a blockchain security company, has announced a new Web3 security tool called Forta Firewall, which is designed to identify and block malicious smart contracts and exploits. Backed by essentially A16Z, crypto, and Coinbase Ventures, Firewall makes use of its AI-powered Fortress model to analyze on-chain transactions in real time. It gives scores essentially from 0 to 1, in other words. It tells the chances of malicious intent behind it and blocks high-risk transactions before they are included in the block. It is newly developed tool essentially intended to mitigate such exploits as attacks on Coral manipulations on both Ethereum and EVA, essentially EVM compatible chains as well. Competitors lack the visibility into pending transactions provided by Forta Firewall, including those in private channels as well, seamless matchings and settlements of transactions, solving major essentially pain points in decentralized tradings. And according to the block, Forta Firewall deploys essentially machine learning and decentralized infrastructures to provide DeFi platforms with top-notch protection. The firewall seamlessly integrates into transaction flows, allowing malicious activity screenings and exploiting, essentially blocking, well before executions. Due to its unique visibility into the pending transactions, and ensures robust protection even against advanced threats. Forta decentralized approach is supported through its layer 3 Forta chains, which powers all its security offerings, such as the firewall, with more than $23 million raised and multiple partnerships, including Elora and Balmy. Forta keeps building his position as a leader in blockchain security. The issuance of Forta token serves to make its protocol even more decentralized and operational. So, without a doubt, essentially, crypto security is one of the biggest issues. 100%. Going into a digital world, keeping sure that your crypto assets can never be compromised by you, or if they're just sitting there in your wallet, it's number one priority. Because the last thing you want is, after building a massive crypto portfolio, for you to get hacked. So Forta, who is backed by Coinbase Ventures, backed by A16Z, so far they've raised $23 million in venture capitalist money, and does have a token by the name of Forta on market cap, has just today officially launched Forta Firewall, something like Windows, essentially, firewall for the crypto space. Security is a big issue inside the crypto space, and what they're offering could be promising. So what I would suggest is look into Forta. Don't buy it in any sort of a way. And full disclosure, I do not own any Forta. I came across the news today. I don't own any Forta. I don't know preferred if I'm going to go for Forta, but what I do like is the concept of their idea. Protecting people inside the crypto space is a key priority. So I like their idea. I would suggest, if you want, read into them. And I don't own any of their tokens. And I personally don't know if I'm going to be buying any of their tokens either. But I thought I'll share the news just in case they do grow and become a massive company. They've already raised $23 million in seed funding rounds. And Coinbase is backing them because they funded them. But there, it seems like a great project to me, a great project. But the reason why I'm not mainly going, because I'm going for financial projects, but it's a great project to look into. Now, what we're going to talk about next is Trump. But before we go through the Trump news, let's go inside the comment section first. But it could be a great crypto project. I don't know, maybe I'll buy it. I'll read into it more, maybe I'll buy it as well. But I don't own any of it at all. Maybe I'll buy it. I'm more into financial projects, but, you know, it's a great concept. And Coinbase is backing them. It's not a bad idea to look into them. So, let's go inside the comment section before we go through the Trump news. How are we spelling Forta? Just like that. F-O-R-T-A. Hello, what do you think XRP will be in a couple of days? 08, 09, 1 in a couple of days? Are you saying in dollars? In dollars is above $1. It's going to be staying around what the price point is sitting at. Until it moves forward a little bit. Good night, Mystic Miles, and the rest of the crew. I have an early start. Funky brother, no problem, bro. See you tomorrow, sometimes as usual. Funky brother. Forta only $60 million market cap, which is great. Honestly, yes, HSBC Bank do own mortgages, so they will do, bro. It's true as well. And yeah, Forta, it is sitting around $60 million market cap as well, which is a good project to look into. Now, moving away from Forta, but keep down your books, to Trump. Trump said to consider crypto lawyer Teresa Gillian to lead the SEC. There are multiple people chosen to lead the SEC, and this person has been chosen by Trump. So, Teresa Gillian, a veteran of the U.S. Securities Exchange Commission, is among the candidates President Donald Trump is considering to lead the agency. People familiar with the situation said she could be the person that replaces Gary Gensler for the chairman of the SEC. Apparently, Trump likes her, and she could be chosen because of her background of being in the SEC and essentially being pro-crypto. Gillian is a partner at a law firm, Baker Hostel, and a co-lead of its blockchain practice. Crypto companies are privately advocating for her to essentially head the regulator based on her experience serving the SEC and opposing the agency on behalf of blockchain companies and traditional Wall Street firms. She is the best candidate of all the people that are currently being opinioned on, said Brendan, the co-founder of Massa, a token-powered decentralized data provider for AI companies. Goody Gillian will make an immediate changes to the SEC, he said. She has a clear understanding of the laws and has essentially clear understanding of the way the SEC works. He also went on to say, we would just have an instant change maker that would dramatically transform the industry with someone that's very pro-crypto. Apparently, crypto companies like that she could be chosen as the next SEC chairman. Crypto companies are coming forward and vouching for her. And Trump is also vouching for her as well. So she could be the chosen person. Goody declined to comment for this story. A request for a comment from Trump transition team spokesperson Caroline Levian went unanswered as well. Crypto professionals have essentially had the Trump's team's ears in the selection process following campaigns in which the industry spent over $130 million on former presidents and other Republican candidates. Coinbase CEO Brian Armstrong reportedly met privately with Trump to discuss personal appointments as well. And Goody Gillian enters a competitive shortlist to replace SEC Chairman Gary Gensler, who began referring to his job in the past tense last week and expected to step down before Trump's taking a seat around January 20th. SEC chair essentially resigns during the transition to new administration. On the campaign trail, Trump vowed to fire Gary Gensler first day of his presidency. Other SEC chairman candidates reportedly include Wilkie Farr and essentially Gilligan and partner Roberts as well, Paul Hastings, partner Brad Bondi, former SEC Commissioner Paul Atkins, Robinhood Chief Legal Officer Dan is also chosen, and a former acting essential comptroller, Brian Brooks, could also be chosen as well. According to her LinkedIn page, Goody's LinkedIn page, essentially she was an attorney for the office of General Counsel at the SEC from 2009 to 2011, when Mary Shapiro became the first woman to head the agency. Later, as Chief Operating Officer and Managing Director and partners, Goody Gillian worked with the former SEC Chair, Harvey Pitt, advising clients against the SEC enforcement cases. The Trump transition team is seeking an overhaul of the SEC and looking for a pro-business, non-bureaucratic essentially, who will unwind the expanding agency created under Gary Gensler's tenure and end the practice of regulation by enforcement actions, according to 3 people with knowledge of the matter. In terms of crypto, the Trump team wants someone who understands the industry and will exercise the restraints and laws of digital assets until clear regulations and legislation essentially is passed by Congress, the sources said. Peers also described Goody Gillian as embodying these principles. She is understood, but she's tough as hell. People are saying she's understood, but she's tough as hell, said Charlie Cooper, senior advisor at digital asset solutions provider R3 and former chief operating officer of the U.S. Commodities Futures Trading Commission. She would govern based on essentially substituted understandings of security laws as they apply to traditional market spaces as well as the crypto, and she will dramatically roll back the prior administration default to regulating through enforcements and reading into the states essentially were written 90 years ago. So apparently even XDC, all 3 quarters basically XDC, even they'd like her as well. Nicole, essentially the general counsel for investment firms Wave Digital Assets, has worked with Goody Gillian on a number of essentially of crypto-related bankruptcies and SEC receiverships. Teresa is a true trailblazer in the crypto space, bringing the expertise and visions needed to lead the SEC and drive the growth of the U.S. crypto space and capital markets. And she embodies everything President Trump envisioned for the sector. The crypto space is coming out for this woman to become the next SEC chairman. Look, if they're describing as what she is, and she's pro-crypto, she understands the law, she's going to come in and change everything dramatically. She has the same vision as Donald Trump. Yes, vote her in. 100% I'm behind this person. If the way they're describing her is the way she is, she has the same vision as Donald Trump, making essentially America the capital of cryptocurrencies and bringing the policies at a dramatic pace, reducing their lawsuits. I'm behind the 100%. If those things are true, vote her in right now is what I would say. Now, moving on from who could potentially be the next SEC chairman to Ripple and Cardano. Now, there has been multiple sit-downs with Ripple and Cardano as founders of, is there a possibility of Ripple and Cardano, XRP Ledger, and essentially ADA coming together? Is there a possibility of that happening? Well, apparently from Cardano's founder, it could happen. Ripple and Cardano alliance. Tech giants drop major partnership hints. In a significant development with the blockchain industry, Charles Hoskin, the founder of Cardano, and David Schwartz, CTO of Ripple, have disclosed potential collaboration efforts between their projects. The proposed partnership aims to merge Cardano's decentralized finance DeFi strengths with Ripple, robust liquidity network, hurdling a potential fusion of two leading blockchain ecosystems. During a recent AMA session, the founder of Cardano addressed inquiries regarding the partnership scope, noting prospect essentially mutual benefits. Cardano's DeFi components could vastly enhance XRP's capabilities. He stated while Ripple could offer substantial liquidity, a stablecoin layer, and cross-chain bridges for Cardano, furthermore, the integration of Cardano's privacy-focused sidechain, Midnight, with XRP was highlighted as an excitement prospect. It would be super cool to see if there's a path to get Midnight working with XRP, said the founder of Cardano. Ongoing communication essentially between the teams is set to continue. With a scheduled meeting between Hoskin and essentially David Schwartz, I've been texting him back and forward. His people are talking to my people, expressed the founder of Cardano. The people from Ripple are talking to the people of Cardano back to back. Confirming the dialogue on social media, posts have been made. David Schwartz acknowledged the discussions, noting it was a pleasure talking to you. Midnight sounds extremely interesting from Cardano. Midnight is an anticipated sidechain focused on delivering enhanced data privacy through cryptographic technologies like zero-knowledge proofs. This innovation promises to supplement Cardano's blockchain while maintaining high transaction confidentiality essentials for secure communications and private transactions. The potential synergy with XRP could notably fortify each platform. For Cardano, assessing Ripple's liquidity might alleviate its DeFi offerings. For Ripple, also, it means enhanced privacies on the XRP ledger. The crypto community is enthusiastic about the collaboration and prospects. Attorney Jeremy Hugan humorously commented on the zero-knowledge proofs complexities and directing his inquiries to David Schwartz for clarification. Illustrating that zero-knowledge proofs, Schwartz presented an analogy of demonstrating maze-solving abilities without revealing the solution. The N in the ZK SNORC stands for non-essentially interactive. He explained, underscoring the practicality in the blockchain context. So, simplest way to put it. Cardano, XRP coming together. Is it a possibility? Seems like very high possibility. Seems like a very high possibility. Also, just want to point out Michael Saylor was asked the question of what he thinks about Ripple. So Michael Saylor was doing an interview. And he was asked the question of, would you accept Ripple? Would you accept XRP? Would you tell XRP to your clients? And Michael Saylor said no. He would not be sharing. He didn't say no to XRP, but what he did say was, he said he's only going to be sharing Bitcoin to his high-profile clients, because this interview just reminded me of Michael Saylor that came out today as well. So he was asked the question of, would you share Ripple to your high-profile clients? And Michael Saylor responded, no. I am only Bitcoin forever. Why would I share an asset that isn't on the same level, isn't on the same category as Bitcoin? Now, I just want to say one thing. Michael Saylor is the same man that stated on a live audience stage that Bitcoin will be the only ETF inside the United States because Bitcoin is the only true asset, is what Michael Saylor said. 48 hours later, Ethereum ETFs were approved. He goes on a live stage in front of hundreds of people, 100,000 people, and he says, Bitcoin only, Bitcoin forever, Bitcoin will be the only one with an ETF. 48 hours later, the SEC approves Ethereum ETFs. Now, the reason why I brought this up is because Michael Saylor did an interview today where he was asked the question of, would you tell your high-profile clients about Ripple or about XRP? And he responded with, why would I share an asset that isn't in the same category as essentially Bitcoin? I just want to point out, when Gary Gensler gets fired or resigns, and we have a new SEC chairman, The second crypto asset in the entire world on the US market space to be regulated alongside Bitcoin will be XRP. The reason why I brought up the first story, because that man was wrong, as he always is. Not as always is, just to be fair. Look, he's an intelligent man. Michael Saylor is an incredibly intelligent man, incredibly wealthy man, no doubt about it. But he's too blindsided by Bitcoin, okay? I've said this before, Bitcoin is a good asset, but it's not the best. There are much more better assets out there that can bring a lot more for the blockchain space than Bitcoin could. The only thing Bitcoin brings to the table is limited token supply. And I get the argument, it was the first blockchain, it created the path. If there was no Bitcoin, there'll be no Ethereum or no XRP. I get the argument. But you should always also understand the other side of the argument, where those crypto assets can perform better under harsher conditions than Bitcoin could possibly ever do. Bitcoin will get congested and struggle under harsh conditions, whereas XRP won't struggle or get congested essentially under harsh conditions. But putting that to one side, the reason why I brought up that story is because 48 hours later we had Ethereum ETFs. After Michael Saylor's big speech, nobody can compare to Bitcoin. Bitcoin will be the only ETF inside the United States market space. 48 hours later, we had an Ethereum ETF. Now, Michael Saylor states the sentence of, why would I share XRP to my high-profile clients when, you know, Bitcoin is the only asset in that category and nobody else is in that category of Bitcoin? Well, if Gary Gensler resigns soon enough or gets fired, essentially gets fired January 20th, we're going to have a new SEC chairman, which means the Ripple case will either get dismissed or settled, which means XRP will be ranking alongside Bitcoin. Then I want to see what Michael Saylor's response is going to be when he's asked the same question of, would you be telling your high-profile clients about Ripple and XRP? Because he can no longer respond with, well, there's no other asset in the same category, because now there is. Because XRP is in the same category as Bitcoin. SEC chairman gets replaced. The case for Ripple gets dismissed or settled. Ripple, XRP, will be the second crypto asset on this planet or inside the United States market space that will be ranking alongside Bitcoin. Ethereum, even though it has an ETF, it still doesn't have a category. It's a bit iffy on the category because the SEC didn't give it a category, but they approved their ETFs. So let's see what it's going to be for them. What's Michael Saylor's response is going to be, because he's going to be wrong once again. Now, I said this, you know, he's an incredibly wealthy man, incredibly intelligent man, but I don't know what it is. He's just blindsided by Bitcoin. And because he's so blindsided by Bitcoin, he can't see the amazing space of blockchain. All he sees is Bitcoin's limited supply. But if he opens his mindset, he can see so many incredible blockchain projects out there. But yeah, that same question is going to be asked to that man once XRP is ranking second alongside Bitcoin. The tables are going to turn. The tables are going to be turning. Miles, what do you think? I did miss that news, I think. Yeah. Miles, when do you think Gary will resign? January 20th is when the FDIC chairman is going to resign, so pretty much the same time. Also, as I said previously, this is a live. If you do have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. Vote her in. Let's go, Stormy, regarding the SEC chairman. Can you imagine how frustrating it must be being pro-crypto and having to work under Weasel Gary Gensler? Facts. I did miss that news, I think, yeah. Yes, HSBC do. Pepe Chino, $1. Really? Look, as I said previously, if you want to hold crypto assets, if you want to hold meme coins, it's completely up to you. If you want to hold meme coins, completely up to you. But position correctly in other legitimate crypto assets before going towards meme coins, because they're highly speculative assets. We're going into rules and regulations, banks and institutions. If you're not positioned correctly, and you're holding camel token in a world where rules and regulations and banks and institutions are in play, and you're holding camel token or frog token or donkey token, the only donkey in that scenario will be you. Because we're going towards regulations, we're going towards banks, institutions, and regulations. And a lot of crypto projects are going to be struggling on the regulations. If you're holding camel token or frog token or cat token or donkey token, genuinely in a CBDC world, the only donkey in that scenario is going to be you for wasting your time inside the crypto space. If you want to hold any sort of animal tokens that have no relevance on the regulations, well, essentially no institution will be lining up to buy any of them. hold 2 to 1%. Don't hold anything beyond 2 to 1% going into rules and regulations. You've got to understand the market space. You need to grow up as well. But if you really want to go for crypto assets in terms of meme coins, 2 to 1%, don't go beyond that. Position yourself correctly in legitimate crypto assets before you touch meme coins. I can't find any information of when ACH will leave Ethereum blockchain and have their own blockchain energy pay. I just hate ETH gases. Do you know when this will happen? It's going to be happening very soon. But they're not going to be leaving essentially ETH chain. They're just going to be having their own chain as well alongside it. Where do you see XDC in the short term? XDC in the short term, not that far off. But in the short term, I just read Brad's comment. But in the short term, XDC is not a short-term project, so long-term is where you should be looking towards it. In the short term, it wouldn't do much of a movement. Long-term will do better movements. I'm buying Crocodile token. Let's go, Chozo. Why not? Don't be a donkey and hold in tokens. No, if you want to hold meme coin, if you want to hold meme tokens, 1 to 2% max in your crypto portfolios. Not financial advice in any sort of a way, but don't be a donkey holding donkey token in a world of rules and regulations. Now, Bank of Italy. Bank of Italy governor urges the European Central Bank to essentially do rate cuts. As I said previously, rate cuts are exceptionally beneficial for the crypto space. Rate cuts are an indication that an economy is not doing too well, which means people start hedging against it on alternative assets. And the Bank of Italy's governor, Fabio, has urged the European Central Bank to heighten the process of slashing essentially interest rates, citing targeted inflation and essentially domestic demand. The governor urged the European Central Bank to discard its meetings by meetings policy and commit to a faster rate cuts to lift the Eurozone economy. Here's the thing. We all know the economy is effed completely. The economy is completely effed. I mean, gas is through the roof still, electricity is still through the roof. Some people can't afford groceries, depending on your jurisdictions. Some people can't afford to pay their mortgages or their loans and so on. So everybody's fully aware that the economy is pretty much effed up. Everybody's fully aware of that. But for some reason, the central banks keep on insisting that we're not doing that bad. And they don't want to do rate cuts. Now, obviously, if they do aggressive rate cuts, we could be heading towards some sort of a bubble bursting. But they can do smaller rate cuts. And when they don't do rate cuts, what actually happens is the inflation gets bigger and bigger and bigger. So it's if they do heavy rate cuts, we're going to a bubble. If they don't do rate cuts, we're going to a bubble. If they do small rate cuts, we can distance ourselves from the bubbles. But for some reason, every central bank keeps on insisting that the economy is doing excellent. Whereas if you have a brain and two eyes, you can pretty much tell that the economy is not doing too well. And that is why Italy's governor, Fabio, has came out and said to the European Central Bank, stop doing meetings back to back and telling everybody the economy is doing great in the EU. In reality, it isn't. So start doing your job and start doing some rate cuts. The European Central Bank's aggressive and restrictive monetary policies following the energy shock have managed to curb the inflation swiftly. However, the Bank of Italy's governor, Fabio, has called for faster rate cuts by the European Central Bank, saying the current restrictive policies limit economic growth. While speaking in Milan on Tuesday, the governor highlighted the restrictive regulatory, such as monetary conditions, were close to targeted levels. Fabio also essentially urged policymakers to retreat their relying on inflation numbers and projections derived from real economic analysis of main drivers of inflation rather than focus on short-term economic signals and current inflation indicators. Fabio, in the most simplest way, said to the European Central Bank, please stick your head out of your asses and maybe check the real world, because the real world is struggling while you're coming on the news and telling the European citizens that everything's okay, don't worry about it, we're doing perfectly fine. When the French real estate market space is about to collapse on itself, the automotive industry in Germany is about to collapse on itself, Italy is about to collapse on itself, the governor of Italy is screaming from the rooftops, we need rate cuts. Stop coming out and telling people we're doing excellent. In reality, we're not. Maybe stick your head out of your window once in a while out of your office to check the real world. Fabio mentioned that the domestic demand in the zones was essentially that a restrictive monetary environment could limit the economy's growth. He warned that the weakening domestic demand and a dull outlook for the world trade required immediate standardizations of interest rates. He called for raised essential rate cuts instead of the meetings by meetings approach that the European Central Bank has executed in the last meetings, because they've done nothing. The European Central Bank keeps on doing meeting after meeting after meeting after meeting, and after a while they'll come out in the news and go, don't worry, the economy is doing excellent. And then they'll go back to meeting to meeting to meeting and come out again and go, the economy is doing excellent. With inflation close to targets on domestic demands, restrictive monetary conditions are no longer necessary, Fabio says. He urged essentially policymakers to shift their focus to falling inflation heading below the central bank's 2% target. Falling inflation has become a raising concern for some lawmakers since the summer. The European Central Bank has cut rates 3 times by 25 basis points, each cut since the year began, bringing the borrowing cost in the region to 3.25%. The central bank may conduct another rate cut in December and more successive essentially cut rates as well next year. The European Central Bank's key deposit rate could be reduced to 2%, which is neutral levels of stable economy. And Fabio cautioned that tackling inflation with restrictive policies is a mistake, and the European Central Bank should handle the situation from a neutral standpoint. Fabio also consistently advocated for rate cuts. He was first raised the issue in the first speech at the bank's governors essentially in November 2023. His recent warnings come after Fabio made another caution to the European Central Bank concerning interest rates on November 1st. Fabio also urged the European Central Bank President Christine Lagarde and other policymakers to consider further rate cuts at the World Savings Day event in Milan. In September, Italy Deputy Prime Minister Antonio at the European Central Bank's decision to cut interest rates by 0.25%, saying it was timed and the central bank should cut the rates further. Tajik also emphasized that he believed the founding treaty should be revisited because it inhabits the central bank's role in controlling inflation. 100% true. Look, we need to do rate cuts. If we don't do rate cuts, then we're going to go to a bubble, which the bubble will burst and the economy will collapse. If we do aggressive rate cuts, the economy will collapse. If we do moderate rate cuts, we can maintain the inflation situation and getting closer to our targets. But the central banks are moving stiff for some reason. They're moving stiff, and it's like they almost want to aim for a bubble on purpose. And the European Central Bank has had enough. He's made a very bold speech and told the bank governors, essentially, the European Central Bank, to stick their heads in the most simplest way of me simplifying what he said, because he said a very professional paragraph, but I wanted to simplify it. He said to them, to the bank governors, to stick their heads out of their paperwork and stick it outside the window and look at the real world. Because while you'll keep on doing meetings back to back and coming on live news and telling everybody everyone's doing excellent, don't worry about it, we're not doing too bad. Maybe stick your head outside your window and see how the real world operates, because in the real world, everybody's struggling, including the country of Italy. And if we don't do rate cuts soon enough, we could be even struggling even more. It's basically what he said. It's very simple. Stick your head outside your window for once in your life and realize how the real world operates, because a lot of people can't afford to essentially pay their mortgages or pay their rents or pay their loans or pay for their gas or electric or groceries. And these are real factors that's affecting quite a lot of people around the world, especially in Italy. And he's right, because those speeches do absolutely nothing for anybody, where even the bank governors of Italy are coming out and saying, okay, we've had enough. Stop doing rate cuts now. Now, Brazil is what we're going to talk about next. Moving on from Italy and their struggling issues, because honestly, France's real estate market is horrendous. Automotive industry in Germany is horrendous. France and Germany are the only two countries holding up the EU essentially in general. And France is struggling, so is Germany, which means if they're struggling, the EU is done for. Brazil is what we talk about next. Moving off Italy's news to Brazil. Brazil's central bank has unveiled their phase 2 of their CBDC pilot. The Central Bank of Brazil has initiated second phase of its central bank digital currency project, DREX, aiming to demonstrate trade finance as a new use case. In a press essentially release, Brazil's central bank announced it had selected Chainlink, Banco Inter, Microsoft, and 7Com to participate in phase 2 of its essentially for its pilot digital currency project. The solution leverages blockchain technology and coral networks to automate essentially supply chain management and enhance trade finance purposes. In this phase, the initiative will utilize Chainlink's cross-chain interoperabilities and protocols to facilitate interoperable transactions between the pilots and from the central banks, with a focus on compatibility and efficient settlement of transactions. Chainlink CCIP is essential to enabling secure cross-border, cross-currency, and cross-chain transactions, and will help showcase what tokenized assets can do for scale for this key CBDC use case in Brazil. Angela Walker, Global Head of Bankings and Capital Markets at Chainlink Labs, according to BCB, the pilot will involve partners collaborating to tokenize an electric bill of landing on-chain, triggering payments to exporters using supply chain data targeted for the entire shipping essentially process. Drex aims to illustrate the benefits of blockchain-based trade finance per the announcement, and this includes the quest to unlock DVP and PVP security settlements processes, and key also will be supplied to chain efficiencies, security, transparency, and access to agriculture, commodities, global trades, and infrastructure developments for the pilots of second phase will commence in the coming weeks, BCB said, the Central Bank of Brazil. Microsoft is the cloud service provider for the pilot project, while the 7Com offers a technical support. Meanwhile, Chainlink infrastructure continues to see adoption in various applications and programs, including asset tokenizations and partners using its services, including Swift, Fidelity International, ANZ, and UBS. So Chainlink was chosen to be used for test purposes by the Central Bank of Brazil, not for their payment services, but for their CCIP services in terms of secure payments. But yeah, Chainlink was chosen. If you're holding Chainlink, that is great news for Chainlink, to be fairly honest. And if you're wondering why is XRP not involved in this scenario, well, because phase 1, they didn't reveal who they're working with. Phase 2, they revealed who they're working with. And phase 2 isn't to do with payments, it's more like data protection, which is why they're bringing in Chainlink for data protection. And Microsoft. Now, what we're going to be talking about next is Ripple. So moving away from essentially the Central Bank of Brazil, in terms of their CBDC, which is also coming out next year, is we're going to be talking about Ripple. Because Ripple released a document on their own website today. And they titled it, Unlocking Opportunity, Ripple and Mercury Corp's Ventures Expands Partnership to Equip Emerging Essentially Market Entrepreneurs. But before we go through that news, let's go inside the comment section first. So before we go through the Ripple news, let's go inside the comment section. As I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. I'd be more than happy to answer the questions you may have. Let's go quickly inside the comment section and we go straight into that news. Where do you see it? Oh, I read that one as well. Quote out, yep. Don't be a donkey and hold donkey token. Yep. Great job, Miles. Great job, Miles. And share the live family. Hashtag crypto Miles. Hashtag let's go Scott. Unlocking opportunities. Ripple is excited to announce Unlocking Opportunities, the next phase of our partnership with Mercury Corp's Ventures, supporting emerging market entrepreneurs and small, medium enterprises, building solutions for financial resilience and through blockchain and fintech innovation. The expanded partnership will include financial and technical support from Ripple for fintechs and small, medium-sized businesses, including those leveraging the XRP ledger and essentially Ripple's products, such as the pending Ripple USD stablecoin RLUSD, focusing on financial conclusion and use cases such as savings, remittances, micropayments, and tokenization of real-world assets. This is essentially a document that Ripple has released on their website, talking about the XRP ledger, talking about essentially RLUSD and tokenizations, and their new partner. With a focus on transformative scalable solutions, Ripple has now continued more than $5.5 million to support Mercury Corp's ventures. MCV is the impact investing arm of Mercury Corp's, a leading global deployment essentially of humanitarian organizations. They have unparalleled essentially visibility in high impact startups across frontier markets, evaluating more than 1,500 startups annually and supporting founders whose products tackle critical financial and conclusion challenges. Over the past 3 years, Ripple's RippleWorks partnership with MCV has supported investments in 54 early-stage companies, 44% of which have at least one female co-founder, which has resulted in more than $500 million in follow-up fundings. If you don't know, Ripple is essentially funding quite a lot of crypto projects right now. Ripple is funding 1,500 startups. 44% of those startups are the CEOs are female CEOs. Among Mercury Corp's ventures investments are essentially Idra and Bitmar, two standout startups advancing financial conclusions across Africa. Ireja, a essentially pioneering fintech based in Cameroon, offers accessible savings and investment products, including tokenized assets like government bonds. Meanwhile, Bitmar leverages stablecoin infrastructure to address key market challenges, including currency essentially devaluations, dollar shortages, and high remittancy costs. So you can pretty much tell where RLUSD, Ripple stablecoin, is going to be used, because they have 1,500 startups that are being funded by Ripple. And these are all scattered and pretty much, in African countries, Latin American countries, Asian countries, and so on, European countries. Scott, the chief investment officer at Mercury Corp's Ventures, underscores the importance of this long-term partnership. Ripple has been a catalyst, essentially founder and partner for Mercury Corp's Ventures, helping us drive meaningful impact across our portfolios. Together, Ripple and Mercury Corp's Ventures will equip more entrepreneurs with the tools and resources to implement Web3 technologies and foster that financial and climate resilience in under essentially served markets. Ken Weber, Ripple's Vice President of Sustainability and Social Impacts, added Mercury Corp's Ventures has been trusted a partner for Ripple with an exceptional record of responsibility, testing scalable, transformative solutions in emerging markets. With unlocking opportunities, we are confident that we can maximize the impacts of our partnerships for entrepreneurs on the front lines of financial innovations and aid deliveries. Unlocking Opportunities kicks off with MCV's latest crypto good for fund, which funds real-world use cases for Web3 technologies in global souths and equity essentially free grants up to $100,000. Use cases focus on DeFi loans, real-world asset tokenization, savings and payments, and stablecoins in humanitarian aid deliveries. Applications to the crypto for good funds are now open. Mercury Corp's Ventures and XRP Ledger Commons will host an informative webinar for essentially for builders interested in leveraging the XRP Ledger and their submissions to the crypto for good for fund. The XRP Ledger's low transaction costs and scalabilities and upcoming EVA sidechains launch make it ideal choice for fintechs looking to develop affordable, accessible, and essentially financial solutions. And projects funded in the previous cohorts include the asset tokenization of Cameroon government bonds. Just point that out one more time. Previous, essentially, cohorts include the asset tokenization of Cameroon government, XRP Ledger, government bonds, to reveal a low-risk, high-yield, essentially savings products to unbanked micro, small, and medium enterprises, reaching 11,000 servers in the pilot period. And the action pilot for Diva donate leveraging stablecoin smart contracts and essentially crypto relays to provide climate risk financing to farmers in the Horn of Africa. Unlocking Opportunities reflects Ripple's and MCV's shared mission to support entrepreneurs and creating more resilient economies. As we strengthen our partnerships, Ripple remains committed to empowering innovators to build transformative solutions for a more exclusive, sustainable across emerging market spaces. So, Cameroon, essentially, 11,000, essentially, 11,000 servers and around 1,500 companies have been funded by Ripple. 1,500 plus companies have been funded by Ripple, which is incredible. And Ripple is building a massive showcase of teams, you could say, pretty much. And you can pretty much tell, as I said, who's going to be using RLUSD, the 1,500 companies they're funding, or the 11,000 servers on board as well, or the Cameroon government, all the African governments that are now working with Ripple as well. But they're taking a very key interest in African market spaces and Latin American market spaces because they're going to become massive. Africa is going to have a lot of developments happening. A lot of countries are looking into Africa right now. A lot of countries have made incredible partnerships with African nations, and they're going to be building Africa from the ground up. It's going to become some sort of a crypto hub, some sort of a blockchain AI hub moving forward. But nevertheless, Ripple is the one that's funding one of these, essentially funding 1,500 projects. And about 44% of those projects are all female-led companies, which is also amazing to see as well. That some essentially some equality is going on that type of scenario as well. But nevertheless, This is amazing news for Ripple, because now we have news that they have been working on the sidelines very silently and funding 1,500 companies that are all going to be using the XRP ledger. 1,500 companies, all of them are going to be using the XRP ledger, because every single one of them are funded by Ripple. Obviously not their entire budget, but they're funded by Ripple, but every single one of them is going to be using the XRP ledger. And that is amazing news. Look, as I said previously, if you want to do well moving forward, remember one thing. We're moving into rules and regulations. We're moving into CBDCs. We're moving into banks and institutions. And the biggest market space is about to go for crypto, which is the American market space. And the rest of the world is going to be following it. XRP is going to be the only token ranked alongside Bitcoin. Now, some people might hate that idea. You know, why is XRP getting ranked second? It's not going to be possible. Some people will say it will never be possible. Some people will say, you know, it's just not going to be happening, or so on and so on. The reality of it is going to be happening. It's going to be ranking second alongside Bitcoin in the same category. I want to point that out as well. It's going to be ranking second in the same category as Bitcoin. Because once Gary Gensler is fired or resigns, either way, he's out the door or out the window in some cases. But either way, he's out. A new SEC chairman, Ripple case is going to get dismissed or settled. The XRP is going to be ranked in the same category as Bitcoin. And knowing how much effort Ripple has made so far, you know, essentially buying out Metico, acquiring so many licensings, buying out a New York firm, the list, the immense partnerships that they do have going on, and now knowing that they've been funding 1,500 companies that are going to be using the XRP ledger and pushing the RLUSD even further as well, and pushing XRP even further as well. There's only one project you should be, you know, really looking into. But look, there are a multitude of projects that you should be looking into. But look, the world is going CBDC. 90% of the world's in CBDCs. They have all the licensings, they have the acquisitions, they have the companies behind them, they have the banks behind them, they have governments behind them, they have licenses behind them. What more could you want? As I said previously, if you already haven't, check out XRP, because the tables are going to turn. And we're getting very close to that stage where the tables are going to turn. And one of the hated crypto assets, XRP, and some people from the XRP army will say, how can you say XRP is a hated asset? Look, I've always said XRP is an amazing asset, and I'll always stand by it, and I've always recommended to everyone to look into XRP. But the reason why I'm saying one of the most hated, you know, crypto assets is because XRP gets a lot of hate. But surprisingly, the XRP haters were very quiet recently. XRP was reaching new heights, and the XRP haters went silent, which is also interesting to see. Because all I could see day out and day in on X was XRP haters just tweeting out, XRP is never going to make it. XRP is a stable coin. XRP has no purpose. XRP essentially, there's no point of XRP because of RLUSD. Do you remember the crypto influencers that were making tweets and saying, XRP has no purpose. What's the point of XRP if there's RLUSD? Yeah, all of those people went silent. And XRP hasn't even went high enough. It just went up a little bit. And all of those haters that were tweeting out these random tweets, what's the point of XRP if we have RLUSD? And just making fun of XRP Ledger and the XRP community in every way possible. Every single one of them have went silent now. I'm telling you right now, I've been telling you for a while, the tables are going to be turning, and we're getting very close to the tables turning. Just keep that in mind. The tables are turning. Just keep that in mind. Now, we've also reached the endings of tonight's live. So, all good things must come to an end, and they have right now. Drop a like, drop a follow. If you're watching this for the first time ever, this was the Crypto Mouse, and this was the CMF Live. If you're watching this for the first time ever, this was episode 206 of the CMF Live, which is absolutely incredible that we're on episode 206 right now. You can tune into this live every single night, 11:25 p.m. UK time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming to digital space. And the CMF stands for Crypto Mouse Family. My name is Miles. I go by the persona of Crypto Mouse. And thank you so much to everybody that liked this live, that retweeted this live on X, that put a comment down outside the live. And thanks so much to everybody that followed me on X as well during this live show. If you watch this on YouTube, thank you so much for the like and comments on YouTube as well. And thank you for subscribing to me if you already did during this live show. But you can tune this live every single night, 11:25 p.m. UK time onwards. So we have reached the endings of tonight's live. Amazing live, brother. Carl, thank you so much for the kind words. Let's go see you tomorrow, but at the same time as usual. So tune tomorrow for episode 206. 207, I mean, because this was 206. Good night, Miles and CMF. Thank you for your insights into crypto markets. Let's go, Mike. See you tomorrow, same time as usual. Good night, Miles and CMF. Great live. Thanks, Miles. Free and forever. See you tomorrow, same time as usual as well. Please check DM whenever you are free, brother. I'll check it out, no problem. Good night, Miles. Thanks, legend. Have a great day and night all. Let's go, Shelly. Shelly, see you tomorrow, same time as usual. Shelly's daughter's Millie. See you tomorrow, same time as usual, hopefully. Good night, Miles and CMF. Great live as usual. Carol, let's go. See you tomorrow, same time as usual. Thanks for the Miles. You're the best. We will talk. DM. Let's go, below. See you tomorrow, same time as usual. One guy on YouTube calling XRP Dusty Token for the last 2 years, but when he saw XRP start pumping, he opened 700K trade and he made 1 million profit in a few days. Good night, CMF. Bill, see you tomorrow, sometime as usual. Thanks, Miles. Good night, all. Stormy, see you tomorrow, sometime as usual as well. Great live, as usual, Miles. Good night, Miles and CMF. Jason, see you tomorrow, sometime as usual as well. Awesome as usual. MQ, see you tomorrow, sometime as usual as well. Thank you so much to everyone that tuned in to this episode and that tuned in to every other episode as well. Tune in tomorrow, same time as usual. This was episode, good night, Miles. I'll see you tomorrow, sometimes as usual as well. This was episode 206 of the CMF Live. I will be seeing everybody tomorrow. Same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. See everybody tomorrow, same time as usual. Drop a like, follow, subscribe, comment, retweet. Let's go. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF, see you tomorrow.